e-govie into China at a price that is lower than the price it sells in the United States, which is an interesting calculation. And CaixaBank in focus over in Spain, they've come forward with their return on tangible equity target above 16% by the end of 2027, a new dividend guidance guy.
Standalone water business. The headline writers are going to have some fun with that one, I promise you. Let's talk about this market open. Here we go. Tuesday morning. The expectations are that we're going to see maybe mild upside, but actually a fairly mixed market for Europe this morning. Anna's been highlighting what's been happening with maybe some of the mining stocks. The FTSE 100 is up by a massive 0.1% already this morning. This again just speaks to this idea that this market is struggling with a clear sense of direction. We're trading headlines. We don't really have a purpose at the moment. Fundamentals don't really seem to be coming to the fore. We'll talk about whether or not that continues for much longer in just a moment. The Stoxx 600 is up by 0.2%. The IBEX is absolutely flat as a pancake. The CAC 40 is flat as a pancake, up 0.1%. The DAX is down, but only just. There aren't many headlines in what we're seeing here for the European equity market open. Dig below the surface, what do we see, Chrissy?
Well, maybe not flat as a pancake, although you have just made me very hungry this morning. When you look at the futures this morning, or excuse me, the index contributions this morning, tech seems to be driving the trade higher. ASML took a little bit of a hit yesterday, so it's no surprise that it is one of their biggest index contributors to the upside. But from a sector perspective, Anna, you were seeing green across the screen. Some outperformance in certain places, the banking sector, the healthcare sector, chemicals are the underperformer. They're flat on the day still, though, so it kind of feels like on the surface a risk-on day.
Yeah, risk-on, and Basic Resources doing their bits, doing their thing in amongst all of that. So Basic Resources, the best performing sector, up by 1.2%. The iron ore price was firmer again through the Asia session. And it's interesting that to think about where we are on the China story, where we've got to, and perhaps we'll talk about that in a moment. But we've heard a lot overnight from that forum taking place in Hong Kong about people's hopes and expectations around China on many different fronts, but what they want from authorities and what they want, and Standard Chartered being quite vocal on this final push to boost sentiment in the Chinese market. Really interesting.
Yep. And it's going to be one that I think, if the Chinese market gets going, does that have a ripple effect back into Europe?
Well, I mean, I was just linking the two via Basic Resources, because often it's sort of expectations around that, around the Chinese growth story.
Is it a luxury story? Are there other factors that come into play? It's hard to tell at this stage.
So Glencore, Rio Tinto, as Anna pointed out. Then you also have Nestle, I should point out, one of your biggest volume performers this morning, higher by 1.2%. We're going to dive into the numbers in just a little bit. But basically, they lowered their margin goal. They're boosting their marketing spending. And yet the market is up on that particular stock. Let's get a little bit more of a macro view here. Goldman Sachs chief equity strategist David Kostin, as Guy mentioned earlier, boosted his S&P 500 target to 6,500 for the year end of 2025, citing continued U.S. economic expansion and earnings growth. Now, the new prediction is on par with Morgan Stanley's Mike Wilson, who recommended investors remain nimble in their sector and stock selection. That sounds fairly familiar. Joining us now, Ian Harnett, co-founder and chief investment strategist over at Absolute Strategy Research. All right, 6,500 on the S&P 500. From David Kostin and Goldman. Do you agree?
Yeah, pretty punchy. But, you know, what we're saying to our clients is definitely at the current time, you've got to stay in these markets. It's an environment where we're seeing, you know, a supercharging, if you like, to the U.S. economy with that tax cut potentially coming through. You know, we've talked about, you know, no landing, soft landing. This is actually a go-around. You know, we've got the pilot putting the throttles forward and heading back off the runway. And that's the kind of thing we're seeing in some of our charts. The earnings expectations rising very aggressively, but at the same time, you've got the Fed cutting rates. You just haven't seen that before in the last 30 years, and now we're talking about tax cuts. What's not to like?
Well, we keep talking about earnings growth. We keep talking about a resilient consumer. But the last time we had this narrative, we kind of got hit by this inflation acceleration, right? It was commodity growth, it was supply chain issues, it was wage growth as well. We're talking again about inflation potentially ticking up. And I
think that's the key thing, Critty, which is actually, you know, we can have this acceleration phase probably lasting perhaps into the middle of next year. But then you start to pay a price. And that price is inflation. And it's interesting, we're seeing in the bond market the way that inflation premia are coming back into these markets. And it's interesting today, Anna, you were talking about those basic resource stocks. You know, people are going to start looking for more of these inflation-sensitive plays as a hedge within their portfolios.
Are you sure the Fed's going to cut rates?
Yeah, Chair
How many more times?
Oh, no, I think we got multiple cuts still on the agenda. You know, going into the next year, they'll want to make sure that as long as inflation in absolute terms is still, relatively subdued. They will carry on keeping rates going. They're determined to have the best possible growth for the lowest possible inflation. That's the mantra they're using at the moment.
What?
Now, whether it will still hold by the middle of next year, that's a different story, I think.
Does it make sense to own stocks if yields on 10 years at 5%?
We're not quite there yet.
Not far away.
The balance between equities and bonds starts to change, and the type of equities that you might want to own will start to change as well. But for now, I think you've got to say stick with those equities. Those bonds will probably face a bit of a tougher time over the next few weeks. Indeed, one of our key trades here would be to talk about curve flattening, not curve steepening, because the front end of the curve will start to price in, that more limited response from Chair Powell, and that is where you normally see these flattening trades coming through. So but for the moment, equities still look good. Sorry.
Okay, no, so things are looking good. You've set out all the things that look good into the middle of next year, maybe, and maybe then we start to pay the price with a bit of inflation. Bringing things a little closer geographically to home, then, Ian, we've heard a lot recently, perhaps unexpectedly, post the election of President-elect Trump, about closeness between the UK and Europe, and this has come out in various arenas and around this desk and in conversations I've had in the radio studio and the like. And I wonder if this is ever going to be tradable. Are we going to see something substantial or investable, should I say? Is there going to be something substantial enough that becomes an investment theme?
I think the key message that came out of the Mansion House speech yesterday, last week from, Chancellor Reeves and Governor Bailey was this idea about the need to reset UK's position with Europe. But in the same way, the UK cannot reaccelerate and grow and reposition itself within the market unless it's got that dynamic investment coming through. And at the moment, it'll be interesting to see in our asset allocation survey, that we're doing at the current time, whether people's attitudes towards some of these markets has changed. But we haven't actually managed to really re-incentivize corporates, particularly small corporates like the one that I run, to actually reinvest. And that is the heart of the problem for the UK. And I'm not sure that this budget did it. And quite honestly, the bond market is telling you that it didn't do it either. Okay, so the bond market is asking questions. Thinking about the stocks world, though, and the discount that we see attached to European stocks of all flavours, I suppose, versus the United States. We were just discussing what Goldman Sachs is doing on that front. How much of a discount do you think Europe should trade at? So we've got about a 30% PE discount at the current time. It's close to record lows. We're actually overweight the Eurozone at the current time. Bit more cautious on the UK, but it's actually peripheral Europe that's doing well. And I think that the link into that China story, Guy, that you were talking about is actually that we need Germany at the heart of Europe to be able to get back into that export-driven model to dump the black zero, and that's where this political debate is taking place at the current time. So it'll be interesting to see how that shapes out. But as Draghi pointed out, the key thing that we need is European Capital Markets Union. And until we get that kind of dynamism in the financial services sector, then we're going to be left behind. And that's true for the UK as well.
I feel like Chrissy should jump in here.
Would you like to?
I'm stunned, Guy. He's got nothing to say now.
I've beaten the subject out of him.
We're going to have a conversation a little bit later on talking about an integrated tape here in Europe. That's the kind of thing that you're basically talking about, the way that Europe needs to figure out a way to harmonise and integrate its capital markets. Yeah,
when you look at the growth and the ability that America has had to build out, this second Gilded Age, as some people are calling it, it's actually related to finance. Without finance, you cannot build a new, healthy growth industry. And Europe needs some growth. And that is what, we can't rely on the old models. We've got to get some new models. And, until we've got better financing, we're not going to be able to do that. And that's the message that, that Brussels needs to get.
Oh, I think they've gotten it. They're very aware that they're 50 years late. I think the issue is just more collaboration, isn't it? But I'm curious how much of the playbook needs to change. We actually had this conversation in the last hour with in regards to a space guest and space financing, and the idea that is it still in government control that does a lot of the financing, or are private markets maybe kind of this new era? Because that's what we're seeing in the U.S., where there's deficit concerns. Private markets are stepping in. Does Europe kind of need to skip ahead past the fiscal and look at private markets as a source of capital?
It doesn't matter whether it's private or public. But actually what it requires is a level playing field in terms of regulation so that you can, write paper in one country, trade in another country, and it's pretty seamless. In America, that ability to grow the non-bank financial institutions, they now account for almost 75% of the U.S. financial system if you exclude the government. So banks only account for about 25% of U.S. financial assets now. That has been a dramatic change, and if you look at the economies that have done best, it tends to be those with more non-bank financing rather than very highly regulated bank financing.
Yeah. Ian, I'm curious about your thoughts on the retail sector, because we talk a lot about it in the U.S.
Yeah.
And as I've nerded out about the consolidated tape, a lot of the pushback is around European retail, which to me feels so much smaller than the American retail base. Is that a real concern? That's maybe to get the financing in these markets, get the liquidity in these markets, you have to engage the smaller players, the much smaller players?
Yeah, it's every part of the equation. At the moment, the UK market, European markets have become such a small component that we're looking at a situation where people will just say, well, why should I bother? And that is true at the retail level, it is true at the institutional level. And so until we see a greater focus from institutional regulators to really incentivize international investors to invest in the UK and Europe and retail investors to do that risk investment, not just private equity, because that, you lose liquidity, and that is dangerous for retail investors. That is dangerous for retail investors. We've got public markets that can do this job and give you similar returns.
And Ian, as we leave you, we've been around the world and talked about lots of different markets, but as we leave you, one of the things that's hanging over our conversations this week is the appointment of a new Treasury Secretary. From your perspective, from the perspective of an investor, when we see that name, of who gets that job, what are the sort of thoughts we should be thinking or tests we should be running against their record to assess the impact they're going to have?
Well, I think, the names in the fray at the moment are all fantastically experienced people, whether it's Lutnick, whether it's Besant, whether it's Kevin Walsh. We know that they all have capabilities, but they all have separate strengths. And, I think the key thing that we want to see is somebody that really understands global financial markets, the interaction between the economy and the markets, and the way that their actions can have unintended consequences. I think markets will judge who it is, but I think it's a great choice that the President Trump has here, and I think it'll be an interesting choice as well.
I think it's the intended consequences that maybe some people are worried about. Ian, thank you very much indeed. Ian Hartnett, co-founder and chief investment strategist at Absolute Strategy Research. Thank you very much indeed. Okay, let's take a quick look at the core six. Then we'll get to Joe and his single stocks. This is what the numbers look like. It's a game of two halves this morning. Novo, LVMH and Ferrari, all soft. ASML, Schneider and Nestle, all a little higher. Nestle's not up by much this morning. It's really interesting how the market is basically taking the capital markets day that we're seeing in Vevey reasonably evenly. We have seen a downgrading of expectations, but I think that was largely, it appears, already in the price. Let's get more moves. Joe, over to you.
It's a very small move higher in Nestle today. It was up around 1% at the open in Switzerland, now just 0.3%. Almost for that one. Now, the year-to-date context is important. As you were mentioning, a downgrade to guidance already kind of factored in. Down 20% for the year-to-date for Nestle on that year-to-date basis. Really important to factor that in. Of course, the sales guidance does look very slightly lower than expectations. The water business being spun off as well. Potentially a small positive on that stock today. Then we will look at CaixaBank over in Spain. This one surprisingly actually coming down. Remember, the dividend target's looking pretty bullish. The return on tangible equity also towards the high end of expectations. But again, the year-to-date context is important for this. It's up 50% year-to-date. That is the best year-to-date, or on track for the best year since it IPO'd back in 2007, boosted by the higher rates and also the M&A that we've seen with Sabadell and BBVA potentially boosting that, so coming down, giving up some of those gains this morning. Then we've got ThyssenKrupp over in the steel space. Now, this is a stock that's been slammed recently by the worries around China and also potentially tariffs from the US, given Trump winning the election and the impact for the metals market. So it's coming back up. Again, it's a valuation call with the sales kind of in line with expectations today. That is coming back up around 7% for ThyssenKrupp in Germany this morning. Then in the healthcare space and technology, we've got Sonova. This is in the hearing aids, listed over in Switzerland as well. Had a big win recently with Costco in the US stocking their hearing aids. And we saw the stock rallying recently, rallying into this report. So it is coming down a little bit, despite the sales pretty much in line with analyst expectations for Sonova in hearing aids today. Then in terms of the ratings, a big one from Bank of America. They downgrade Siemens, the massive industrial giant over in Germany. It's all about the automated factories, according to Buffett, not selling enough for them, and therefore the guidance coming down, as we saw from the company just last week on Siemens. So that one slipping, underperforming. Buffett is now a neutral. We're down 1.6% for that one. And then finally, here in the UK, Sainsbury's. This is the preferred supermarket over at RBC. They say a sell-off related to the rise in national insurance that we saw in the budget is overdone. That stock down pretty sharply over the past few months. RBC has outperformed, and that stock is rising at 1% on the FTSE 100 this morning.
Okay, Joe, thank you very much. Yeah, so earlier gains fading a little bit. The FTSE is still higher, up by 0.3%, but elsewhere we see some weakness. Autos, consumer products, all a little bit softer this morning. Coming up on the programme, we'll return to the tech theme. The US Department of Justice is set to push Google to sell its Chrome browser in an attempt to break its search monopoly. We will get more on that story next. This is Bloomberg.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's emissions.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Welcome back. Watching the opening trade. We're 20 minutes into the session, 19 minutes for a Treasury Secretary to be picked by the incoming Trump administration before we get that sense of direction. Anyway, we'll wait and see. Let's talk about some of the other stories that are certainly moving markets this morning. Bloomberg has learned the US Justice Department is set to ask a judge to force Google to sell its Chrome browser in what could be a historic crackdown on the big tech company. For more, let's bring in Bloomberg intelligence analyst Tamlin Besa. Good morning.
Good morning.
So we're kind of waiting to get the clarity that we need on this story, but it looks like this could be certainly something that the DOJ is going to proceed with. What happens once that process starts to unfold?
Right, exactly, and that's where we are now. So the judge found on liability. It did find earlier this year that Google had maintained an illegal monopoly in search. So right now we're preparing for the remedial trial, which is going to be upcoming in April. It's going to be about a 1 to 2 week trial. So what we're hearing right now is reports that the DOJ is going to say, as the primary focus of this remedy, it wants Chrome to be divested from Google. So we're ready. Google's going to respond to this, and this is all going to play out at this April trial.
Okay, so then we're not at the end of this story yet by any stretch. Talk to us about the interplay between politics and the administration and what these courts find, because on the one hand, I am sure there's supposed to be plenty of distance between, but we are about to go into another Trump presidency, and he's got very outspoken views, just as many presidents have had, about the role of tech and big tech. What should we know about a second Trump term in this case?
Yeah, absolutely. And this case actually began in Trump's first term, which kind of shows you the long tail that these antitrust cases, they go on for years and years and years. So this was something that was pushed for by the first Trump administration. And if you look at the sort of Trump and sort of Biden, it's been sort of bipartisan antagonism towards a lot of the big tech and certainly in a monopoly. So under the new Trump administration, we're sort of waiting to see who some of the key people in key positions are going to be. Certainly you might have a sort of more relaxed environment on M&A, but it's really unclear if sort of the aggression over big tech on some of these monopoly practices is going to change. And also in this specific case, I think the judge is not really going to worry too much about the administration. He's going to look at the potential remedies that are being recommended by the DOJ and then sort of Google's response.
So that's interesting. So it's not, so when we're talking about the interplay between politics and these court rulings, it's not necessarily that we're thinking about political pressure. It's just that when bodies make decisions about which cases to bring, that might be politically influenced.
That's absolutely the right way to look at it. The judges themselves are most likely not going to bring a political bent to it, but it's the terms of potentially even the remedies that the Department of Justice is pushing, those are some things that might have a political slant to them.
When it comes to some of these remedies, though, does it change the actual business model of Google, of Alphabet, just given that Chrome is, I think I read somewhere, 61% of the domains around the world? It's how Google gets its advertising. Is this kind of what underpins or unpins completely or unravels the company?
So yeah, Chrome is incredibly important to Google. It is what it uses to really get a lot of the data on your browsing history that it then uses to really tailor ads. So it's a very crucial piece of this advertising part for Google. So the question is, are there some other remedies? And the judge, I think, is going to be very interested in what are some other potential remedies that are less drastic that might also help unwind this illegal monopoly that he has already found that Google does have.
Yeah, certainly something we're going to be keeping a very, very close eye on as we monitor the situation. Bloomberg's Tamlin Besa joining us to kind of break down what that DOJ potential crackdown on Google may actually look like in that Chrome spinoff. There's another company that we've got our eye on, and that's the world's biggest food maker, Nestle, seeking to revive its sluggish sales growth by boosting its marketing spending. Shares are down about 0.7%. Let's bring in Bloomberg's Dasha Afanasieva, who's actually at the Nestle headquarters in Switzerland right now for their Capital Markets Day. Dasha, walk us through what we've learned.
Hiya. Yesterday, the new CEO, Laurent Freixer, said that sales will grow 4% plus in the medium term. That's assuming that Nestle's categories grow 3 to 4%, which is what Nestle estimates. On top of that, they are, as you said, reducing their profitability goal from what Freixer's predecessor estimated. So now it's going to be around 17%. So the idea is that for years, Nestlé's brands did not receive enough investments. And now customers have turned away, particularly during the cost of living squeeze. And now it's all about investing that little bit more in brands to coax them back. On top of that, we learned that they're going to separate the global water business, which is brands like Perrier and Aquapana, and then look into strategic opportunities. Well, the way they phrased it was partnerships. So it does kind of raise the question of, will they end up selling this business, which is actually a lot less profitable than Nestlé as a whole. The other piece of the puzzle is, whilst you've got increased investment in advertising and marketing, they're actually trying to find the cost savings elsewhere, particularly in the medium term. And by 2027, they're going to have 2.5 billion Swiss francs in cost savings on top of previous cost savings that were previously announced.
Dasha, this doesn't feel radical. This doesn't feel out of whack with what the market was largely looking for. And you're certainly seeing that in the share price reaction this morning. Is there an expectation that the new management team may have to go further, or is this about as much as is required to get this business back on track?
Yeah, I think on the one hand, maybe we shouldn't be that surprised that it's not radical, because although you had the dramatic ouster, Frank has been with the company for almost 40 years and has been in top management. In terms of whether we'd expect more, there are analysts who said we expected more disposals. I certainly spoke to a lot of investors who didn't think water would be on the chopping block, but thought other parts of the business that were underperforming. But instead, the CEO has said that on the whole, told investors today in a very rainy and grey Vevey, that he would be trying to overhaul those businesses within Nestlé rather than selling them. So I think that he's got these goals, and it's going to be reassuring that he thinks it's still a mid-single digit, roughly, business overall in the medium term. And then if he can't reach that, I guess he could sell other things. But I should note that some people also think that mid-single digit number's ambitious, or that 4% plus number is ambitious.
Dasha Afanasieva there, joining us from a rainy Vevey to, I think, what's a snowy London. We thank you so much for breaking that down. Coming up on the program, we're going to talk a little bit more about the consolidated tape. Natan Tiefenbrunn from Gazebo Global Markets is joining the program in an exclusive interview to talk about what those next steps may actually look like. Stick with us. This is Bloomberg.
In case you missed it on Bloomberg Technology.
We're excited to really change the expectations for space companies, where you have this always-on, reliable, and frankly dynamic satellite connectivity that you would expect of your power grid or of your cell phones. And so we think that this is a huge opportunity space, and our first contribution to it is through shared infrastructure.
You can see this whole ecosystem developing, and you have an exponential growth right now because easier access to space means more demand for space, and that's the definition of an exponential growth function. So if you think about someone like Varda, who is only possible now because access to space is cheaper and easier, we're demanding more access to space.
I think that's what's so exciting from a business perspective, is the fact that if you can do it, you're one of the few numbers of organizations in the history who've actually pulled it off. And so it creates a very defensible position, because again, space is very, very hard.
Don't miss Bloomberg Technology live every weekday.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
This is the opening trade. We're about 30 minutes into today's session, and sentiment has soured everywhere but the UK. You are seeing the FTSE 100 higher by about 0.3%, but you're seeing the other parts of the European continent actually trade lower. So a little bit of perhaps that catch up that we saw in the US trade as well. Let's take a little bit of a big picture look, though, because one of the big conversations that were happening is, yes, the Trump trade, it's yes, the geopolitics, but it's also how Europe does a little bit of catching up in terms of making these markets a little bit more liquid. And that's what I want to zero in on. In a bid to make those financial markets more competitive, the EU is looking to create a single market for capital, pooling prices, trading volumes, and other information from over, get this, 500 execution venues across 27 countries into a single data stream. Now, it does sound ambitious, but that's what a consolidated tape is. It's technology that existed 50 years ago in the United States, and it could make investments easier to cross borders here in Europe. And although it does have some broad support, not everyone is convinced. Well, the process is alive and well. One contender to do that is for the pan-European equities business is Cboe Europe. It's partnered with Akis Exchange in a new company called Simplicity. And the man behind it all is Netan Tiefenbrunn, Cboe Global Markets President of North America and European Equities, joining us around the table this morning.
Good morning.
Good morning. I've kind of set it up a little bit. It's a complicated issue. It's something that is trickier in Europe with 27 countries. Why can you do it? Why can you pull it off?
Well, first of all, I think those who opposed the introduction of a tape made the point that it was too complex. I think they're over-egging that a little bit. We don't think it's particularly difficult. We already consolidate data today from all of the pan-European equity venues and from all off-exchange trading. We do that day-to-day as part of our existing business, as do Aquis, our partner in Simplicity. So we're really confident that we can do this because fundamentally we do much of it already.
But there seems to be a question of pre-trade, of post-trade, and because of this resistance, I'm curious about how quickly the uptake could actually come to fruition. What kind of timeline are we looking at here?
That's a great question. So the Pan-European Supervisory Authority, ESMA, will start the selection process for the equities tape in June of next year or July, and then they'll have about 6 months to select an operator. And once they've selected an operator, that operator will have a reasonable amount of time to launch the service. How quickly consumers will adopt the service is, of course, harder to predict. And that will come down to two crucial factors, whether it's priced competitively, it's attractive, and also whether the licensing framework offers significant efficiencies compared to purchasing data independently from each of the 27 underlying exchanges.
I'm glad you're starting to get into the nuts and bolts because to your point of exchanges, you need a lot of broad support to make this happen for that adoption. And lucky for all of us, we had a conversation last week with one of these exchange operators, Stefan Bujna, of course, the CEO of Euronext, joined the program. Take a listen to what he had to say about adopting the consolidated tape and the concerns around it.
We believe that a full consolidated tape would create a situation where insiders would have access to good prices and retail investors will get the leftovers in terms of spreads. So we don't like it. And that's why we believe that an order book, a transparent order book, is the best place for retail to contribute to the market and to benefit from the market.
So Stéphane Bougeant, the CEO of Euronext, talking to us a little bit about his concerns there. Basically, that it would edge out the smaller investors, edge out the retail players, and that's why he's vouching for a post-trade consolidated tape, but not a pre-trade consolidated tape. What do you say to that? That concern that it edges out the smaller players?
I don't think that's a genuine concern. First of all, legislators have already decided it is going to be a pre- and post-trade tape, and all exchanges, all large exchanges, are obligated to contribute their data. So at this point, the ship is sailing, the train is pulling out of the station. But it is interesting, there are two contenders for the equity tape so far. One of them is a consortium of incumbent exchanges who have largely, as Stéphane just did, opposed the introduction of the tape. And fundamentally, the tape will introduce competition for the availability of market data. Yeah. So I think exchanges today prefer that investors have to purchase data directly from them bilaterally, and the tape will offer them an alternative to purchase the data on a pan-European aggregate basis under a single contract and at a single price.
Does data get cheaper?
I think it will get cheaper, and certainly in two ways. There's the price, the explicit price, but also the cost of administering the distribution of that data within your organization and using it for multiple purposes. And that possibly is seen as a threat by some of the incumbent exchanges.
Shall I just look at the US and what it does and see the technology, the application as being the benchmark here of what we're going to ultimately see here in Europe? Is it a kind of one-for-one?
I think our requirements are somewhat simpler than in the US. So the US, as well as having a consolidated tape, the SIP, also has something called the Reg NMS, the National Market System, which kind of links all the exchanges together in terms of how they trade with one another. We don't have that same regulatory framework, so the tape is not going to be used as heavily for some low-latency trading applications. So it's an easier problem to solve in Europe than it is in the US.
That's interesting to hear. Nathan, is this going to be something that materially adds to attracting capital for Europe? Because a lot of people pile this in with Capital Markets Union and say, there are other bits that are missing, but this is also missing, and we need this for that reason.
Yeah, I think the answer is it's necessary but not sufficient. So, of course, European markets are fragmented, they're difficult and complex to access, and the tape is a part of the furniture that you need to present a European shop front that is attractive to global investors. There's also the European equivalent of EDGAR, a database of all company news and filings, etc. But there's also more that needs to be done to unlock the sources of capital, so the Capital Markets Union, or renamed the Saving and Investment Union, and also to encourage issuers, companies, to raise equity capital rather than debt finance.
Yes, so necessary but not sufficient. Will it be material? Will it have a material impact on those CMU, or by another name, intentions?
We believe so. I think what we see around Europe is that, for example, an average retail broker, they will market domestic trading to their customers and they'll market US trading to their customers. But what they don't do is offer pan-European trading access, and that's due to the complexity and the expense of sourcing European market data from all these different venues. So we think it's about changing that landscape and that behavior to be more pan-European in outlook.
So you say pan-European. We talked about 500 exchanges that you have to basically get on board. We talked about the concerns about having a pre-trade consolidated tape, and that's where the pushback kind of lies. And I understand that it's been in the regulatory framework already, but for the adoption for the exchanges, how can you make this a little bit more palatable? What kind of concessions maybe can you make?
So ESMA is essentially stipulating the format that exchanges will provide their data in. And as I said, all large exchanges are obligated to provide their data. So the adoption problem is not on the data submission, it's on the consumption side. And that's where it comes back to the attractiveness of the pricing and the licensing framework. For any given equity trading in Europe, there are only 4 or 5 exchanges that it trades on. So that 500 number was an exaggeration thrown around when incumbents were trying to put policymakers off the scent on this important initiative.
The exchanges often use legislation. It is law, therefore I have to charge X for this piece of data. And that's something you hear when you talk to certain exchanges about how they are going to pursue their pricing models. How much flexibility is there within the pricing model? You talk about pricing coming down for data. Many of the companies that are watching this program at the moment spend huge amounts of money on their pricing. Is this the cleanest way to get lower pricing for the users of the data, do you think, around Europe?
I think there are many different types of data, but if we're talking explicitly about real-time market data, you know, I work in financial markets. I'm a big believer in competition as being the appropriate mechanism to drive pricing improvement to consumers. So the aim of the tape is to introduce an alternate source for the same or similar data and thereby create competitive tension around pricing. And certainly we'd advocate in favor of that versus any kind of intervention, you know, government intervention on pricing. So we hope it will work to that effect.
Great to see you. Thank you very much indeed for coming and seeing us. Nathan Tiefenbrunn, the President of North American and European Equities at SIBO Global Markets. Thank you very much indeed. Nice to see you. Coming up, we're going to talk about what is happening in Germany. The Chancellor there, Olaf Scholz, leaving his domestic woes behind him as he takes the world stage at the G20. Germany's never far behind him, though, and there are plenty of issues that are in focus relating to what is happening at home. We'll talk about all of those next. This is Bloomberg.
First of all, global trade, which had adverse consequences that we're learning about to this day, still unleashed an enormous amount of gain for humanity. And with the rise of global trade became the rise of information sharing around the world, which rapidly accelerated the trajectory of mankind. I mean, of note, the Chinese, for example, are leaders in solar. They're leaders in EVs. They're leaders in a number of emerging technologies. In a world which is more splintered, we'll see the gains that the Chinese have achieved in these important areas not shared by the Western countries. And conversely, the United States is a clear leader in AI, along with a number of the European countries. And those gains will not be shared with China and the countries in its sphere of influence. So it's a very clear-cut loss for all of humanity when we have the severing of ties between our countries.
On a practical level, is it getting harder to manage the risks you face?
I think that one has to be aware that there are more tail risks that are harder to ultimately manage.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Welcome back to the program. This is the opening trade. We're seeing something of a risk-off move in markets, and it's not just stocks. We're seeing stocks weaker, yes, but bonds on the rise, and we see yields therefore dropping a little, both in the States and here in Europe. The yen then on the rise. Not entirely clear what's been driving this, but just around the same time, we started to hear some more lines coming through from Russia about their reaction function to some of the news flow we've heard from the United States around the use of long-range weapons into Russia. So we'll keep all of that under review, Critty, as we watch these fairly substantial moves in the yen. yen.
Yeah, and you mentioned the yen. I should mention the Swiss franc is appreciating as well, as is gold, seeing a little bit of a bump. And of course, you mentioned the boon move. You're seeing it in the Treasury move. So your classic haven bid is alive and well in this market.
It's interesting, isn't it? The market is really struggling for a sense of direction. The market is really struggling for a narrative to latch onto and figure out what is happening here. It feels like, Mark was talking about this earlier, we're really trading on headlines. Like really trading on headlines at the moment, because there isn't this kind of obvious North Star for the market to kind of get its hands on.
And he was talking about some of the move we've seen in the last few days in the dollar, and now that seems to be gaining momentum and pace. So we'll continue to monitor that. Let's talk about some of the things that have been going on in Hong Kong over the last 24 hours. Important conversation. Standard Chartered CEO Bill Winters says Chinese markets are beginning to improve, but it'll probably take more fiscal stimulus to give consumer and business sentiment a final jolt. He spoke exclusively with Bloomberg from the sidelines of the Hong Kong Monetary Authority's Global Financial Leaders Investment Summit.
Last year was, I would say, the reestablishment of Hong Kong as a real business destination and hub. This year, I think we're slightly celebratory because Hong Kong's actually doing quite well. Signs of recovery. The Chinese market is excuse me. No worries. Yeah. Chinese market is beginning to improve. Obviously, seeing significant improvement in equity markets. Sentiment shifting. We're far from done. We know that. But but I would say now it's about really getting back to business and getting back to growth in Hong Kong and China.
I think the first panel of the day, and we have a fantastic lineup there. I think you have the CSRC regulator, you have the who's who effectively of Chinese officials there. Do you think they've managed to put a floor underneath both the market, the economy, and sentiment? I mean, those three can be separate things.
I think there's been good progress on all fronts. So I think the monetary stimulus, one obviously was stimulating the economy, but also put a little bit of a floor under the property price disaster. Right? It's been a really bad recession in property prices, and we haven't recovered yet. And there are some nascent signs of recovery, but basically I think they put a floor under it, and it was a clear statement. We're not going to let this thing get out of control. The recent local government debt swap, I think, took another issue off the table, which was the local government finances, which we know that a lot of those governments were financed by land sales, which have gone to something close to zero given the property market. So just stabilizing that takes a big question off the table as well. There's suggestions that there will be further fiscal stimulus to get the economy going. But we all know that the confidence is still quite low. Consumer confidence is low. International investor confidence is low. There's also some geopolitical stuff going on there. But local and entrepreneur and business confidence for investment is low as well. So you probably need one further jolt to get that engine.
What do you think that would be?
Most likely fiscal stimulus. There could be a little bit more monetary. There could be a little bit more sort of directed social financing for small businesses, things like that. Okay. So I think we'll see those kind of programs. But we all know that China is full of animal spirits, and that the animal spirits were squelched for the past few years, given all the challenges that China has experienced. We got to get those animal spirits going again. I can tell you, I'm beginning to feel that in Hong Kong in a more material way. But China's obviously a much bigger place. It's a tougher ship to turn.
Yeah, I mean, we've been here, I think, the past 3 years as well, and I can tell the vibe and the energy is different this time around. The guest lineup, the location is slightly bigger as well. One last question on China. You put the banking hat on for me. Do you think it's a good idea to bring all that debt back onto the formal balance sheets, whether that's the banking system or the central government?
Yeah, I do. I think there was a big overhang for two reasons. One, it was unsustainable at a local level. So the alternative was some kind of default or perennial forced restructuring, which is never builds confidence. Right. And second, it wasn't very transparent. So we didn't know exactly how much there was and where it was. I think this just takes one big question off the table. Of course, there are lessons to be learned about financing local operations through property sales or property transactions. But this also frees up the local currency, the local government balance sheets for the kind of stimulus program that could come next. Right. A lot of the implementation of any stimulus is going to happen locally. Right. It's not going to come from the central government. Now these balance sheets are freed up to really get the economy going again.
And it's the sense you're getting to that officials have taken into bigger consideration the private sector and what the market, how the market actually feels about what they're doing?
I think the representation we're seeing here at this forum today, and at similar fora that I've been to in China this year, the government is all in terms of re-engaging the private sector in the most fundamental way. It takes time. These sort of confidence rebuilding things. We've been through it in whether it's the U.S. or Europe or Korea or Japan. We've been through these transitions many times, and fortunately for me in my life, many times. In almost every case, it takes longer to get going, and then it happens faster than you thought.
Okay.
But I think we're in the get-going phase right now.
That was, of course, Standard Chartered CEO Bill Winters talking to Bloomberg in Hong Kong. I want to pivot back to this market move that we're seeing at the moment. You're seeing a number of safe havens catching a bid. You're certainly seeing movement in the Swiss franc this morning. You're certainly, as you can see, seeing movement in the Japanese yen, which is catching a bid. You're looking at dollar yen there on your screen there. As you can see, a fairly violent move. You need to zoom out a little bit just to put it in context. But this seems to be on the back of these headlines that we're getting relating to what is happening in Russia and a decision that appears made by the Russian President Vladimir Putin to approve an expanded use of nuclear weapons in Russia's doctrine. This appears to relate back, of course, to the use of longer-range weapons being supplied by Western allies to Ukraine for use in Russian territory. And this takes us to what is happening in Germany. Olaf Scholz, the German Chancellor, defending his decision relating to this issue not to give the Taurus long-range missiles that Germany has to Ukraine, even though the US has made that decision and authorized Kyiv to be able to use its weapons to strike inside Russia. So this kind of all relates back to what we're seeing in terms of the screens that you're watching so carefully at the moment. Bloomberg's Oliver Crook joins us on this story right now. So Olaf Scholz is making the decision that he feels that the risk is too great to make this decision to allow Taurus to be used by the Ukrainians inside Russia. I'm assuming that this is very much relating back to what we're seeing in Germany in the election process that is unfolding. But how much pressure is he under?
Yeah, listen, I think he's reaching a lot of pressure from a number of different allies, particularly from the G7. I mean, the sort of old playbook we've seen throughout this entire war in Ukraine is basically the U.S. is the first one to act, says, you know, we're willing to deliver tanks, for example, and then Germany follows and falls in line, and never really wanting to be the ones that sort of cross lines initially. That has been sort of Scholz's policy throughout this war. So the hope for the Ukrainians, at least, was this move from Biden would potentially allow Scholz to make that decision and to allow those Taurus missiles to come through. That is something that Olaf Scholz has basically shrugged off and says that absolutely not. He is not changing on his position. It is interesting to have Biden make that decision, and now in the context of what we're getting out of Russia from Putin here, who we understand approving the expanded use of nuclear weapons in the doctrine. Just to give a little bit of context to what this is, basically back in September, Vladimir Putin said that Russia will revise its nuclear doctrine to include a response to aggressions by non-nuclear states that is supported by other nuclear powers. It's not hard to read too much between the lines of what that means. Basically the support of Ukraine from, say, the United States and other Western countries, and saying that basically an attack on a Russian member of a coalition will be seen as an attack by that coalition. An attack by a non-nuclear country aided by a nuclear country will be seen as a joint attack. We heard from Dmitry Peskov, the spokesman for the Kremlin, saying that this doctrine was updated in a timely manner and that Ukraine using missiles could cause a response. So that is sort of, you understand a little bit more of why the Scholz position and a real reticence to try to give that sort of carte blanche to the Ukrainians, particularly as he's running this election campaign in Germany, where you have on the one hand the CDU, who have really been in favor of delivering these long-range missiles. And we should say these Taurus missiles can strike much further than the American ones. They can go more than about 500 kilometers, while on the other hand, you have the AfD on the far right and Sarah Wagenknecht on the far left, who have both been sort of advocating a policy of retreating support to Ukraine and really focusing on the question of escalation. And it seems that Scholz is really on the side of not wanting to escalate the conflict, though it must be said he has pledged his sort of continued support to Ukraine for as many years as is required.
Oliver, thank you very much. Thanks for the timely update. Bloomberg's Oliver Crook there, joining some of the dots for us between what we're seeing in the markets and the commentary we've had out of Russia in the last half an hour, and the two do seem to be linked. We are watching that unfolding on our screens right now, even if well flagged back to September, as Oliver was talking about. Let's dive deeper into some of the market moves that we're seeing here, what we're watching in markets. Bloomberg Markets Live. Ven Ram joins us now for analysis. Let's start with the yen then, Ven, because we're seeing some quite substantial moves here in the yen. But it's not alone. It's a sort of classic flight to safety on geopolitical concerns. Is that what we see in front of us?
I think what is going on, Anna, is the idea that, look, we have, the markets are priced in plenty on the fears of trade tariffs and how that's going to be inflationary. And I think that, that trade has run for almost a month now, if not more. And therefore, there is a bit of profit-taking opportunity, and that's what we are seeing. What is adding to the yen's relief is the idea that Kevin Walsh may get the Treasury Secretary post, and he is seen as someone who is hawkish on monetary policy and also less protectionist, and therefore the idea of the tariff trade may have come to a fruition so far if he's nominated. But these are early days yet, clearly, and we are in speculative territory, but there is scope for the yen to unwind its recent losses, and that's what we are seeing at the moment.
Well, then you're seeing it across the board in terms of that kind of traditional haven bid as well. You're seeing it in the Swissy, for example, and I'm curious how much of that trade is still alive and well when Japan and Switzerland are both dealing with inflation issues of their own. Is that the right hedge, or is this just a knee-jerk reaction?
No, I think that the Swiss franc is a completely different story, Kriti, because if you look at inflation in Switzerland, they are averaging 0.6%. That's as low as it's gotten anywhere in the developed world in this cycle. So I think that what we are seeing for the franc is the idea that, look, the franc is going to do better than probably all the other European currencies should the trade tensions come to a simmer. And if that happens, I think that the franc has a bid on it because, it's a net external creditor to the rest of the world. I mean, some 110% of GDP, to the extent of 110% of GDP, that's huge. And that naturally provides a ballast to the franc in terms of stress, in times of distress. And that's what we are seeing at the moment. And I think that the franc has got plenty more legs in the months to come.
All right, Bloomberg's Ven Rom walking us through some of the major moves we're seeing in the currency market this morning. We thank you so much. We are seeing a red headline across the Bloomberg terminal that China's chip advances are stalling as the United States curbs hit Huawei's AI product. Now, the context is important here because we know that Huawei has been quickly trying to find not only alternative, supply chains in terms of chips, but also trying to find a different market to actually get them. And this is something that, as we've seen the United States quickly phase out Huawei product and Huawei, even the suppliers that get products to Huawei and raw materials, It looks like they're trying to maneuver that.
And you do wonder whether this gets even tighter, even more draconian when we get a Trump administration coming into power in January. That would have to be the assumption.
Yes, and people familiar with this story, talking to Bloomberg, suggesting that the US-led restrictions that prevent Huawei's chip-making partners from accessing some of the ASML technology is really the key thing here. And so, yes, how the Trump administration decides to move forward on that particular policy or not will be crucial, no doubt.
It's an important one as well for ASML because more of their exposure is in China than it is in the United States, despite, and this is a real sticking point with the Dutch government, which really wants to appease both sides. They can't do it. It's a fascinating one where the corporate sector, the tech sector, the immigration policies, the politics, it all kind of comes nicely together in a little bow.
Yeah, meanwhile, still witnessing this sort of risk-off mood in markets. We'll try and unpack that a little bit, no doubt, through the next hour of programming. Some of these lines out of Russia giving investors pause, it would seem. Coming up later today, don't miss our interview with the JP Morgan Investment Banking Chairman, Madhu Namburi. That conversation at 5:30 p.m. UK time. Little risk off then across European markets this morning. We will leave you with the pulse. That is up next. This is Bloomberg.
A reasonable rally. I mean, how much more upside is there to it?
So it's funny, about 4 years ago, I wrote a piece on why Bitcoin can reach 100,000. And I think in 2025, there may be a chance that we actually see that prediction coming across. But putting that aside, I do think that Bitcoin's value has always been holding true. The reason we are seeing it going up is exactly a reflection of markets' reaction to Trump administration, or the anticipation of Trump administration being pro-crypto, pro-Bitcoin, and also pro-economy.
Huge things are coming. What exactly are we looking out for? What would be a game changer in terms of regulation, easing of regulation? What would prompt that rally to go higher?
I think there are actually two sides. One is really market expectation about how the Trump administration's policy will affect the macro economy in general. General policies around tax cutting, general policies around healthcare spending, around their external policy, and the impact on labor market. That's one side. I think generally right now, at least, the market is very optimistic about what the new administration will do and how it will actually help support the market. I think the other side is about what the market expecting about the administration's policy toward crypto, right? In general, like clearer policy, clearer regulation, whether there will be actually a federal regulator instead of in current state, it's very much state-by-state approach. Is SEC or CFTC going to take the realm? How long will the industry see actually certainty? And that actually have a huge impact on how the banking industry, particularly the tier one banks, their appetite in accepting crypto business and providing on-ramp to crypto platforms, which obviously have a downstream impact on crypto price in general.
The balance of power. This is Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Warsh as Treasury Secretary nominee, with hedge fund manager Scott Bessent as director of the National Economic Council. And the German Chancellor Olaf Scholz has defended his decision not to give Ukraine its long-range Taurus missiles, even as the U.S. allows Kyiv to use its weapons to strike inside Russia. So happy Tuesday, everyone. There's a lot going on in markets, but politics and finance. First thing is first, let's check on the markets, and this is what the European map is showing us. Now, if you look at European stocks, they're actually rising a bit. Again, Asian shares did decline. Treasury yields bolstering the appeal of holding equities. Now, traders definitely watching two things. First of all, any further news about President-elect Donald Trump's planned administration that could give us clues, but it is early days on what kind of policies the president will put in place. A couple of other things that we're watching out for, and I have to say all of the action is probably in treasuries. I would also watch out for gold. Treasury 10-year yields actually slipping 1 basis point, so about 4.1, 4.4, after dropping 3 basis points in the U.S. Again, a couple of other things. Probably watch out for yen strengthening versus G10 pairs pairing some of its recent weakness. And then we look, of course, at some of the other things, not only yen at 153.81, but S&P futures, you can see pretty much flat. Now, Bloomberg has learned that the Department of Justice is set to push Google to sell its Chrome browser to break up its search monopoly. So let's look at pre-market, what Alphabet is doing for the moment, but also let's actually try to figure out what this means for some of the competitors going forward. Let's bring in Tamlin Basin. He's technology analyst at Bloomberg Intelligence. So Tamlin, what exactly is happening here?
Yeah, so Francine, what this is the DOJ pushing its recommendation. Now, what this is this follows a trial that was held earlier this year, and in that trial, the federal judge did find Google liable for maintaining an illegal monopoly. So we're setting the stage here for another trial on remedies, and that trial is going to take place in April next year. And so what the DOJ, the reporting is that they're going to put forward a proposed decoupling of Google and Chrome. So that's where we are at now. It's not happened yet, but the reporting is that that's what the Department of Justice is going to recommend that the judge do.
So, Tamlin, what happens under the next administration? Is this sort of scrutiny on big tech likely to change under Trump?
Yeah, I mean, that's a great question. And of course, it's sort of a bipartisan beating up on big tech. You've got Republicans and Democrats both willing to do that these days. And actually, this specific case began under Trump during the first administration. So what we think in this particular case, I don't think the judge is going to pay too much attention to who's in the White House. But setting the stage going forward, it is going to shape maybe the kind of cases that are going to be brought under the new FTC and the new Department of Justice. So we're going to have to see what people are appointed by Trump to fill those key positions going forward.
Tamlin, thank you so much. Tamlin Basin there, technology analyst at Bloomberg Intelligence with this big Bloomberg scoop. Now, Super Micro shares soaring pre-market after the company hired a new auditor and filed the plan to come into compliance with NASDAQ listing requirements. It also follows various challenges for the company, including a damaging report from short seller Heidenberg Research. And last week, it said it would be late with quarterly reports. Now, shares tumbling more than 85% from its peak in March. Actually, pre-market, because of that sharp fall since March, is now gaining 38%. Stocks have also climbed. Treasuries halting a sell-off that drove 10-year yields near 4.5%. Traders keeping a very close eye on news around President-elect Donald Trump's administrations. Now, for more on all of this and the market reaction, let's get straight to Ursula Marchioni, Head of Investment and Portfolio Solutions, EMEA at BlackRock. Ursula, as always, thank you so much for giving us a little bit of your busy schedule. When you look at, the appointments of Donald Trump, is it a little bit too soon to see exactly what policies he'll put in place that could move markets?
Good morning, Francine. Thank you for having me. So yes, it's clearly early days, but I think one element has emerged very clearly over the last couple of weeks, which is the fact that the results of these elections have been a clearing event for markets. We have seen an incredible continuation somehow, moving to the next step of the move into US equities. After the summer, already in October, we've seen investors globally buying with conviction into US equities at the rate of $75 billion only in exchange-traded products. So again, we're beating records in all different manners. And this, again, is a trend that is continuing on steroids. So 2 weeks ago, we saw additional 52 billion flows into US equities, and last week around 40. So for sure, Francine, I think that element is clear. For me, the biggest question remains, one, where do we go from here? Two, how to play it in investors' portfolios? And three, for investors that are domiciled outside of the US, what does it make of portfolio home biases, for example, European equities, for investors in our region?
Ursula, these are the perfect questions, because I was wondering exactly the same thing. Is there a danger now that U.S. equities are priced to perfection because a lot of the deregulation, a lot of the policies that the equity players actually like under Donald Trump have already played through?
Yeah, I fully agree with you. And yet, Francine, I think in the short term, so looking into year-end, looking at the beginning of 2025, it's difficult to see, a significant derailer to the rally. Certainly looking forward, and I think that's where you were going, the fiscal position of the US, the position on trade, valuations being extremely stretched, can become an area of concern. But for now, again, valuations are elevated, but are well supported by earnings. And so, again, I don't see necessarily a derailer there. I think the key question there is, as we look into this rally, do we play for breadth or do we play for concentration?
And so, Ursula, so the answer to that question, and what does it mean for Europe? I guess a lot will depend on whether the dollar rally continues or whether the Trump administration will try and temper that at any cost.
Agreed. So I think Europe is, has been an interesting area for European investors year to date. We have seen 9 months of consecutive purchases, both in terms of exchange-traded products and mutual funds. So European investors do want to continue to support the region. At the same time, it's becoming costly. It is true that from a portfolio benchmark perspective, home biases are pervasive. At the same time, this US exceptionalism is becoming prevalent. And so, again, it's difficult not to jump into opportunities to pivot between breadth and concentration. So we've seen yesterday, for example, on the concentration front, a paring back of what we saw on Friday in terms of some losses. It's coming back. Tomorrow we have a big earning release, and so again, Mag 7 under watch. On the other side, if I look into 2025, forecasted earnings are comparable between the S&P 500 and the equal weight. And so again, you can see some breadth coming up and potentially being interesting. And again, there are plenty of instruments to trade, for example, top 20 S&P out there. We did something recently as well. So you can see the opportunity to tactically move around and be nimble. Certainly for a European investor, that needs to be embraced, but it does open up the more profound question around the home bias in the portfolio and how costly has that been and will continue potentially to be.
Ursula, how much do you worry about the inflationary story and the fact that actually the Fed and other central banks may not be able to cut as much as is currently priced in because of trade wars and tariffs?
Yes, it is certainly an area to watch. Taking a step back, it's clear that this is a feature of the new regime we've entered. More elevated rates, more elevated inflation. Of course, central banks are easing, but we're not going to go back to the lower bound that we enjoyed for decades throughout the Great Moderation. So for me, inflation remains in that picture. Zooming out in portfolios, we do need to adapt to a world where inflation will be systemically higher. I do agree with you. The trade approach of the Trump administration will be a key component going forward. But zooming out again, giving more space, for example, to infrastructure as a portfolio allocation is a good way for clients to adapt to a regime where, again, these parameters will be more elevated than what we've experienced before.
Ursula, thank you so much. Ursula Marchioni there from EMEA at BlackRock. We'll have plenty more, of course, on the markets throughout the day. And Ursula has some also great thoughts on everything to do with European equities. Now, coming up, President-elect Donald Trump is said to be weighing Kevin Warsh at the Treasury, Scott Bessent to lead the National Economic Council. So we'll discuss what the picks of the Trump administration look like in terms of policies. That's next. And this is Bloomberg.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington. It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. Politics to the world of business. Joe Matthew and Kayleigh Lyons deliver news, insight, and analysis live every trading day. Balance of Power live around the world every weekday, only on Bloomberg.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Welcome back, everyone. Now, Bloomberg understands that President-elect Donald Trump is considering appointing Kevin Warsh, a former Federal Reserve official, as Treasury Secretary, alongside hedge fund manager Scott Bessent as Director of the National Economic Council. Well, Bloomberg's Kevin Whitelaw joins us with the latest. Kevin, what would this appointment mean in terms of what Donald Trump wants for the economy?
Well, I think, you can see that Donald Trump is really agonizing over this appointment much more than he's agonized over the others. He's obviously trying to balance what he wants with his broader sort of trade and security agenda, his desire to disrupt the way D.C. Does business, with the broader sense of making sure that he picks somebody that Wall Street is going to find some level of comfort with and will sort of manage the economy in a way that will help actually, keep stocks rising, which is sort of Trump's main barometer of this. So with Kevin Warsh, I think he sees someone that Wall Street would feel a strong degree of comfort with. It's someone who was part of his circle in his first term, and someone he even considered to be governor of the Federal Reserve. So I do think that, I do think you do have some comfort level with where Warsh stands on issues like inflation and sort of the Fed's management of the economy, some of the criticisms he's had. That's an area where Trump and Warsh seem to be rather in sync.
But Kevin, why has a pick for Treasury Secretary actually been harder for Trump than other appointments?
Yeah, well, I mean, I think when you look at some of the choices he's made for whether it's the Pentagon or some of the the Director of National Intelligence, he's choosing people who are really going in, who would really go in with the idea to really break things up, to really rip things apart, and to totally disrupt the way that those agencies and institutions are structured and do business. That's not what actually he's looking to do with Treasury in quite the same way, because he wants to make sure that Wall Street approves of what happens there, and that his quote-unquote reviews in the stock market are going to be positive. And so I think he's actually finding himself challenged a little bit, because many of the people that are sort of going to comfort Wall Street may not share sort of the same zeal for Trump's protectionist agenda, the tariffs policy in particular. And so I do think that he's finding himself sort of torn between the reality of what Wall Street and what businesses are kind of looking for, with sort of the tariff ideology that Trump wants to bring to his next term.
Kevin, thank you so much. Kevin Whitelaw there with the very latest Trump appointments. Now, as you see, yesterday we were in Athens, today we're in Rome. We continue our European tour really to try and figure out also at this juncture in time with the election of Donald Trump where European countries sit. There was a little bit of an upset for Giorgia Meloni's coalition. This was because of regional elections where we saw the center-left candidate winning back the central Italian region of Umbria in local election. Now, it's a little bit too soon to know what exactly this means going forward, but we are putting the spotlight on Italy throughout the week. And I also want to draw the viewers' attention to a great book written by our bureau chief in Milan, now bureau chief for Southern Europe, Prada by Tommaso Ebhardt. And it kind of instills really some of the panache, some of the hardworking resolve that this company in luxury, I mean, it doubled in terms of sales, it doubled in terms of revenue and market cap over the last 20 years since it IPO'd in Hong Kong. And it's a jewel of a book in Italian, but soon to be in English, that gives also a little bit of a glimpse inside Italian society. Coming up, oil steadied after the biggest gain in more than 5 weeks. Majid Jafar from Crescent Petroleum joins us next, and this is Bloomberg.
Fixed Income Fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
As we spend some time here on the broader presidential race,
let's focus in on European politics.
Makes you wonder how politics might play out.
Welcome back. Now oil drifting lower today after the biggest gain in more than 5 weeks as dollar weakens. Majid Jafar, chief executive of Crescent Petroleum, the Middle East's oldest private oil and gas company, joins us now. Mr. Jafar, thank you so much for being with us. I mean, there's a lot of talk about what the energy complex, what it means for oil and gas under a Trump presidency. Does it change things at Crescent Petroleum? How do you invest and how you deploy cash?
So I think, we can look beyond political headlines. In fact, the U.S. Oil and gas production reached a peak under the Biden presidency, and most of the sector there, well, all of the sector is private sector driven. So changes on policy may not actually impact the domestic agenda. What it could impact is the global investment perspective. On the one hand, we don't want to see backtracking against climate commitments because they are important, but more support from capital markets, particularly for natural gas as a key transition fuel, as recognized by COP28 last year in the UAE and also by the EU, is needed. We estimate there's about $250 billion annually being invested in natural gas today. That needs to double just to maintain demand because it's a vital replacement for coal in developing countries and an enabler of intermittent renewables by providing a stable baseload.
But Majid, has your blueprint actually for the transition to net zero changed in the last 3 weeks? Does it get delayed even if the U.S. doesn't get out of the Paris Climate Accord?
So the climate accord is important in terms of signaling for other countries. There was a very successful COP and UAE declaration last year. The oil and gas sector was included more than ever for the first time, and we're a proud signatory of the Oil and Gas Decarbonization Charter. But our own journey has actually been moving from oil when we started 50 plus years ago, more in the UAE, now 85% natural gas in countries like Iraq, Egypt through our affiliate, and we've achieved and maintained net zero carbon neutrality across our production since 2021, while bringing our carbon intensity down to a third of the industry average. Plus, the gas we've produced in the last 15 years in the Middle East has avoided over 50 million tons of CO2 emissions. So that vital role for natural gas, particularly in developing countries, is recognized in the energy transition.
What extra investment plans do you have in Iraq? I know, for example, the Khor Mor field in Iraqi Kurdistan was hit by missiles and drones earlier this year. What's the status of that field now?
So there's been, thankfully, no impact on production, which continues at over 500 million cubic feet per day, plus condensates and LPGs. And we're currently implementing an expansion plan to increase that by 50%, hopefully, if not by the end of next year, then early in 2026, certainly by Q2 of 2026. In addition, we're actually operating now 10 fields across Iraq, including in federal Iraq, in the Diyala Governorate and down on the Basra border as well. So Iraq is a big expansion area, but we're also active through our affiliate in Egypt and looking at other opportunities in the Middle East, which still has half the world's oil and gas resources, including in North Africa.
Yeah. Majid Jafar, very quickly, what are your fundraising plans? I know you've sold a number of bonds recently. What's your appetite in the market right now?
So we successfully placed a Nordic bond for Iraq expansion, $350 million last week, but also it's really a variety. So some of it is regional banks in the Middle East, also the U.S. Development Finance Corporation, because they recognize the key role is not only just Paris compliant, our project, but enables social and economic stability, and also sometimes contractor financing. So it's different sources of financing, but the financing is available. There just needs to be more creativity and engagement.
All right, Majid Jafar, thank you so much for joining us, Chief Executive Officer at Crescent Petroleum. Now, we're just getting a little bit of breaking news. It feels like a turning point, actually, in Ukraine, making its first attack strike inside Russia. Now, this is a new approach, an approach, of course, that was blessed by the U.S. just a couple of days ago when they approved to apply this American-made Army tactical missile system known as ATACMS. Now, these are supersonic guided missiles. They have a range about 300 kilometers, can carry a conventional or cluster munitions. So this is a turning point. This is according to RBC Ukraine. These are the first attacks. Putin, for his part, has approved the expanded use of nuclear weapons in doctrine. Again, we'll try to get to the bottom of what exactly this means, whether it's an escalation that could have consequences for the immediate future. We'll unpack that next. Plenty more to come. And this is Bloomberg.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions, has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in Rome, and these are your top stories. Bloomberg has learned that the U.S. Justice Department will push Google to sell its Chrome browser in what would be a historic crackdown on one of the world's biggest tech companies. Now, Donald Trump's team is said to be considering former Fed official Kevin Warsh as Treasury Secretary nominee, with hedge fund manager Scott Bessent as director of the National Economic Council. And a Ukrainian news agency says Kyiv has made its first strike inside Russia using U.S.-supplied attacks. Well, meanwhile, Germany's Chancellor Olaf Scholz has defended his decision not to give Ukraine its long-range Taurus missiles. So, as we said, just back to our story, Bloomberg has learned that the U.S. Justice Department will push Google to sell its Chrome browser in what would be a historic crackdown on one of course, the world's biggest tech companies. We had a terrific roundup. I mean, this could have future implications for what the DOJ department does next. Now, there are a couple of questions in the context. Is the Biden administration trying to push these things through the DOJ on some of the possible deregulation that's coming? Are they doing preemptive action? And is the same being applied to Ukraine and some of the geopolitical questions? So a Ukrainian news agency has reported that Kyiv has made its first strike inside Russia using these missiles, U.S.-supplied attacks missiles. Now let's get more from Bloomberg's Oliver Crook. I mean, Ollie, it feels like a significant escalation. Does the U.S. and the U.S. actually, and President Biden gave the blessing to Vladimir Zelensky to use these very big missiles a couple of days ago. Does that come with the guarantee that if Russia escalates, the U.S. is there to protect them?
Well, I think that this is a slew of questions that we do not yet have the answers to, Francine. And just to recap some of the news that we just got in the last few minutes, because this all feels fairly significant, is what we got from Vladimir Putin was signing into a decree allowing Russia to fire nuclear weapons in response to any kind of massive conventional attack on its soil. That would include drones, that would include presumably long-range missiles, that Russia would view aggression against itself or its allies by non-nuclear state backed by other nuclear powers as a joint attack. In summary, basically saying that if there was an attack on Russia by a member of a coalition, that will be seen as an attack by sort of the full coalition, i.e., even if it's a non-nuclear power aided by a nuclear power, that would be seen as a joint attack. This is something that Putin has been talking about signing into as a decree since September. This is officially happening now, and it comes, obviously, Francine, just on the heels of that sort of news that we got from Joe Biden, basically permitting the Ukrainians to begin using some of these ATACMS within Russian territory in the Kursk region, not sort of all across Russia, but within that region. They have a range of about 300 kilometers. And this is coming at a time right now when we understand, again, from Ukrainian news agencies, that those first missiles have been deployed. So what we are getting this morning in the last few minutes is Putin, on the one hand, signing a decree that says that any sort of coalition strike that is backed by a nuclear power, even if it's by Ukraine, non-nuclear, striking within Russia, could see a nuclear response. Again, that is why there is seen a huge move into the haven assets over the last few minutes. You can see it on the sort of German bonds have been being bought up. You see the euro moving, you see gold moving, you see everything moving, because there's a lot of uncertainty as to what this means. Again, when we think about the possible red lines in Ukraine and when they are drawn, this sort of goes back to what we've been hearing from Olaf Scholz, who has been much more reticent, for one, to support any of these strikes within Russia, presumably to try to avoid a situation that could escalate severely.
But Ali, on these ATACMS, I mean, again, as you said, they're American-made Army tactical missile systems. There's these supersonic guided missiles. Will we know what they've hit this morning and what this means in terms of escalation? Or is the market just, before they find out, they just want to get out of risky assets?
I think that that's what you have to assume, that people want to get out of risky assets. When you hear sort of a Russian nuclear response in the same breath as a strike, within Russia by some of these U.S.-made weapons, that you're going to get a lot of fear within the market, right? And this is exactly the kind of thing that Olaf Scholz has been talking about at the G20 when he was asked, basically, will you follow Joe Biden? Will you begin to deliver your own long-range missiles, a Taurus system that has an even further range than these U.S. ATACMS? Will you be able to deliver those? Will you begin to deliver those to Ukraine? He said, no, absolutely not. My position is unchanged. And that comes after he is really the only G7 leader to have had any contact with Vladimir Putin. They just had a call this Friday and basically saying that Putin had not really changed his position on anything. And he's, of course, also, fighting his own election within Germany, where some of the Germans are really very concerned about possible escalation. And many of the voters here, particularly on the far right and the far left, which are doing very, very well here, want to see less involvement in Ukraine, not more involvement. So this is a story that obviously has huge ripple effects within domestic politics across Europe. But as you can see this morning across the markets, with catching a bid here from the German bonds and across really the whole sort of haven complex right now.
Ollie, thanks so much. Oliver Crook, our correspondent in Berlin. Now let's get back to the U.S. economy. U.S. inflation proving stubborn, while consumer spending shows scant signs of slowing down, laying the groundwork really for a more cautious approach to interest rate cuts from the Federal Reserve. Now, for more on the outlook for the U.S. economy and labor market, we're joined by Neela Richardson, chief economist at ADP. Neela, I'm so happy to have you back on the program, especially at this difficult juncture in town where we try and figure out what Trump policies could mean for the economy. How do you expect the economy to change over the next 6, 8, and 12 months?
Well, first of all, good morning. Fantastic to be with you again, Francine. I think what's really important to keep in mind is that the U.S. economy, though it's not perfect, it is growing, and it's growing at a pretty stable, steady rate, 2.8% in the third quarter, well set up to grow strongly in the fourth quarter with retail sales coming in hotter than most economists expected. And then finally, the labor market well positioned to continue to put jobs in place into 2025. And so even as we are still contemplating how policy shifts could change hiring trends, the labor market is in a really good starting position going into 2025.
Neela, and as you say, I mean, we're trying to figure out what policies could mean, but these policies have not really been announced. For the moment, they're only campaign promises. If there are tariffs between 10 and 20% to most countries around the world, is that automatically inflationary for the U.S. economy? And does that complicate the life of the Federal Reserve?
Yes, it does complicate the life of the Federal Reserve to have a different policy position now part of their economic calculus. As we know, tariffs are an increase in goods that are imported from other countries. And what we've seen in terms of the labor market is that all sectors are hiring, save manufacturing. Manufacturing has struggled. It struggled going into the pandemic. It has struggled coming out of the pandemic. And so how these two things intersect, policy changes and manufacturing, still remains to be seen. It will depend on what products are excluded from tariff policy, and that is part of policy. Having products that are opted out or countries that are opted out. We don't have those details, and those details are far away from us. I think how we can benchmark the intent and the outcome of any policy changes is really through the manufacturing sector. If there is hiring in response to those policies, that is one outcome. If there is continued shedding of jobs in manufacturing, that is another. So I would point to that very specific industry for the telltale signs of how tariffs are resonating on Main Street.
And how much of these, of course, the changing the dynamics of the labor market have to do with AI? And does that come quicker than we think, or does it actually come slower because of some of the policies that can be put in place?
Again, this is a time of uncertainty when it comes to innovation and technology. We know that frontier innovation is happening very quickly, much more rapidly than other technical change and technical cycles. But companies are positioning to really incorporate AI and what AI means to the workforce. If you match what's going on in terms of labor productivity, which has been slowing globally. With the promise of AI, you might see that some of these skills that have been slow to be able to fill from employers, finally we will see an ability to upskill workers, to increase labor productivity. So that's the promise, but the adoption still remains to be seen. So we have new policy changes with the new administration, and we have innovation. And then there's a third factor, Francine. We have an aging workforce globally in advanced countries. So all of these things are coming together to take a pretty strong U.S. labor market and cloud it in some good changes, perhaps, and also some risks going forward. And so it is early days in figuring out how these changes translate.
Anila, I mean, this probably even complicates more things for the UK, right, and the Bank of England, given it's a small open economy. I know we'll see some of the wage negotiations probably in January, but are you confident that countries, like you're in Germany today, but also the UK, will be able to manage through their trajectory by continuing to lower interest rates?
It's a great question. Your second part of your question, will they be able to manage by lowering? I don't think that's a foregone conclusion. I don't think we can put inflation to bed quite yet. We still haven't reached target in many countries, including the UK, including the US, target inflation for a sustained period of time. And that last mile towards the 2% target may take longer than expected. We saw in the US an uptick in CPI over the last 12 months. That was the first uptick in quite some time. There is a slowdown in UK labor markets and in the EU, slowdown in hiring, but these labor markets continue to be stronger than they were before the pandemic. And then, as you just reported, global conflicts can play a role, especially when it comes to energy costs in Europe. So these factors do complicate central banks' decision-making. And though the US and the EU and the Bank of England would like to lower rates at this juncture, surprises into 2025 could complicate that smooth path downward back to neutral interest rates.
Nella, thank you so much, as always, for being part of the program. Nella Richardson there with some great insight, chief economist at ADP. Now, coming up, bankers anticipate a rebound in M&A deals in the new year. We'll discuss this and much more with Jonathan Aerosmith, the head of the investment banking unit at Investec. That's next, and this is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is
did. Recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Welcome back, everyone. A bit of geopolitical news that is actually moving markets today. Now, I'm looking at bonds climbing, stocks retreating. Again, traders definitely tracking the latest news from Russia's war against Ukraine and speculation over President-elect Donald Trump's picks for a Treasury Secretary. Now, we did see a sell-off in risky assets, and this is after Russia said it was pushing ahead with a nuclear doctrine that allows its expanded use of atomic weapons. And this underscores the sense of worry in markets about the war in Ukraine. It follows also Joe Biden's decision to allow Ukraine to attack military targets in Russia using U.S.-made long-range weapons. And we understand from RBC Ukraine that the first such strike has actually taken place this morning. So we'll keep a very close eye on this and see exactly what happens and when it happens next. Now, investors gearing up for a rebound in M&A deals, particularly in the U.S. Let's also discuss the deal-making outlook with Jonathan Aerosmith, Investec's head of investment banking and M&A. Jonathan, thank you so much. Fantastic last name. I mean, if you're not a rock star, I don't know who is. Talk to me a little bit about M&A and what comes next under the Trump administration. Are there going to be animal spirits, or is it going to take a while to understand the policies to get M&A back on track?
Hi there, good morning. With respect to the M&A market, M&A markets generally tend to thrive on stability. And actually, in terms of that macro picture, the interest rates, the inflation, the political backdrop, many of those things are becoming much more stable as we look into 2025 in the US, but also in Europe. And so what we expect is a cautious rebound in terms of M&A activity over the course of 25, and then an increased level of activity in 2026. A lot of that will be driven by the political certainty that we have in the US and the UK and across Europe. But a big chunk of it will also be the stability around interest rates. Interest rates with the use of debt for acquisitions is increasingly important to understand exactly what that debt picture looks like so that people can price assets properly.
So, Jonathan, are there, if you look at Europe, are there sectors that are still ripe for consolidation? There's been a number of consolidation or M&A stories in luxury. Is there anything that still needs to be disrupted where you'll see the bulk of M&A in the next 12 months?
I think the sectors that are ripe for consolidation are those where the investors see the most potential return. Those are those sectors that have the most relevance and resonate with that investor backdrop. So the sectors that we're spending a lot of time in at the moment are healthcare, tech, services, which is obviously significant in the UK, but also across the rest of Europe, and industrials. Consumer as well has got some consolidation to be done, but a lot of it the interest seems to be at the luxury end. And actually, as you come down towards the non-luxury, there's a little bit less sort of relevance from an investor perspective.
But Jonathan, is this basically private equity going in there? Because there's also been a trend in the last 3 to 4 years that a lot of private equity buys big companies, but then hold on to them and of selling them back off. And there's also been a mismatch between, what the sellers want to sell a company for and what the buyers want to buy it for. Does that normalize?
Yeah. Yeah, I mean, I think private equity, have been generally a force for good within the industry. What they do is they tend to buy a platform asset and then they put a lot of bolt-on deals behind it. So they run that consolidation play, recognizing that scale is important. They have the capital to do that. That historically has been significantly the debt markets, but increasingly they've had to flip that towards their own equity to support those growth. What they then seek to do is obviously sell on an asset that's quite different from the one that they bought, which is significantly larger, has some slightly different growth dynamics, and they will seek to either sell that back onto private equity or to trade, and sometimes into the public markets as well. So that's typically what's been happening. You mentioned a price mismatch there. The price mismatch tends to come from the fact that private equity, when they bought it 5 years ago, would have bought it in a different interest rate environment than the one that they're selling it in. With the interest rate environment now more expensive, what it means is asset prices have come down a little bit. So often they're found in a situation where they like to sell it for a price and they can't quite reach that. The question then is whether they keep hold of it for another couple of years to generate those returns, or actually whether they seek to take that slightly discounted price and move on to the next thing.
Is the UK government, the new UK government, doing enough to attract IPOs? Are you going to see, if not a flurry, certainly more companies being attracted to list in the UK?
Yeah, I think on the IPO front, it's been a very weak market for 2 years, 3 years now. 2024 was moribund. I think there's only been 4 IPOs on the London market, one of which was Rosebank, which we were involved with, very pleased to be involved with. We're expecting IPOs to come back in 25 and 26. The reason is actually those exits from private equity, and those exits of very good private companies, we think will find their way onto the public markets. It's also because the public markets are supported by fund managers in the UK that are getting inflows now. Those inflows are very important because they like to put that capital that they have to work in new issuance. The government recognises the importance of the public markets in the UK. It recognises the importance of the new issuance IPOs onto that market, and we're seeing some encouraging signs in terms of the way in which they're approaching it, seeking to actually streamline a little bit of the governance and the regulation, and in the recent budget as well, making sure that they didn't, as was voiced beforehand, potentially impact AIM with some of the changes to the inheritance tax. So we're pleased to see that the government is talking the right language around supporting the UK public markets and IPO issuance as well.
Okay, Jonathan, thank you so much for the great insight. Jonathan Aerosmith there, Investec's head of investment banking and M&A. Coming up, German 10-year yields fall after Ukraine reportedly uses some U.S.-supplied missiles on Russia for the first time. We'll have more in a moment, and this is Bloomberg's.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Well, a Ukrainian news agency reports that Kyiv has made its first strike inside Russia using U.S.-supplied long-range missiles. Let's get more from Bloomberg's news director for the EMEA region, Roz Matheson. Roz, this feels like a big escalation. We also hear that actually Vladimir Putin is now talking about changing the doctrine to allow nuclear missiles. I know the markets are concerned. Let's take a big breath. What do we actually know?
There are two things that have happened here. One, as you say, is that after the US made that change to allow Ukraine to strike Russia with longer-range missiles supplied by the US, supplied by the West, it seems that first one has now happened, according to Ukrainian media reports. A strike overnight on an ammunition site pretty close over the border, about 70 miles from the border with Ukraine. So as expected, contained for now to those border areas. This is the use of ATACMS, Army Tactical Missile Systems, they're called. And it's a longer range missile, but it doesn't have to go that far to get over the border, obviously, into Russia. So a limited action so far based on those reports, and not surprising, although it did happen pretty quickly after that approval came through from the US. And it seems on the back of that, timing-wise, the markets are a bit concerned because we've had confirmation that Vladimir Putin, the Russian president, has signed off, has approved a change to Russia's nuclear doctrine. That's a doctrine change that was first announced back in September, so the details are not new. What is interesting here is the timing of the announcement that he's signed this doctrine and putting it into decree as a result. So publicly stating today they're endorsing these changes to the nuclear doctrine. But the changes themselves, we knew about those some months ago.
But Roz, this is funny timing because, of course, we have a change of administration come January 21st in the U.S. So are the next 2 months especially delicate? Could we see an almost like power vacuum where also Putin tries to take advantage, or are we going to see Joe Biden trying to really put his stamp before he leaves office?
We're probably going to see both of those things. We're going to see in the months leading up to the Trump administration taking the seat in the White House, is that you're going to see Russia trying to push the advantage here on the ground inside Ukraine. We're already seeing that. They're pushing on regardless. And at the same time, Ukraine seems to be trying to get itself in the best possible position militarily. In the reality, you know, Ukraine's allies are now saying publicly Ukraine will need to get to the point where it has to negotiate an end to this war, at least a ceasefire in this war, and how to position itself to be best able to do so. And that means getting itself set up militarily on the ground. So it's pushing again inside, you know, the Russian border, over the border area militarily. It's using these longer range missiles now, obviously deploying those on Russian soil. So it's about positioning really for both Russia and Ukraine to be in the best place possible at whatever point they're going to have to come to the table, or that Russia will feel it's ready to come to the table. And that seems to be where we're headed in the next couple of months.
Roz, thank you so much. Bloomberg's news director for the EMEA region, Roz Matheson. Again, bonds climbing, stocks retreating as traders are trying to track and figure out the latest news from Russia's war against Ukraine. Up next, Bloomberg Brief, and this is Bloomberg.
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
I will never keep my ideas to myself again after learning this. Hi there, visionary entrepreneur.
Do you have an innovative idea that's ready to revolutionize the world? Now's your chance to turn that vision into reality. We're offering you the unique opportunity to pitch your idea directly to investors who are eager to fund the next big thing. All you need to do is create a short video showcasing your concept, your passion, and your potential. Send us your video and we'll broadcast it on our media channel, reaching investors who are specifically looking for groundbreaking ideas like yours. Remember, it's crucial to include your contact details so investors can reach out to you directly. Don't let your brilliant idea gather dust. Seize this opportunity to get noticed, gain funding, and make your entrepreneurial dreams come true. Pitch your idea today and watch your future unfold. Click the link in the description to get started. Your big break is just one video away. Don't wait. Take action now.
In the headlines of today, and what will likely be the headlines tomorrow.
Above all else, it's emissions.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the...
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Good morning from our global headquarters in New York. I'm Menace Granny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
Stocks turn lower, bonds rally. Local reports state that Ukraine has carried out its first strike in Russia using American-made missiles. President Putin approves expanded use of nuclear weapons. Narrowing the search, President-elect Donald Trump is said to be considering Kevin Warsh for Treasury Secretary and Scott Bessent for the NEC. And the last push from Biden's DOJ, the plan split Google and its Chrome browser. We're going to have more on that Bloomberg scoop coming up. Good morning, Manus.
Danny, good morning. I think we've just had a refresher course in the past 45 minutes of what it is to be pushed around by geopolitical headlines, this approval of an updated nuclear doctrine. There's nothing particularly new in that. We know that this was coming. We'll talk to Mark Champion in a moment. Stocks are lower. So much for Goldman Sachs. I mean, they've got a new target at 6,500, up from 6,300. Maybe this is an opportunity you buy the dip on any of these geopolitical drawdowns because the market will remain fiscal friendly. Roll it over. Have a look at the bond market. We both looked at these markets. The first jolt came with the strike from the Ukrainians into Russian territory. And then, Danny, we saw a second wave on this updated doctrine from Putin.
Yeah, it really just shows you how sensitive these markets are, Manus, especially at a moment where oil has not reacted to this. It's the equity market and the bond market. And maybe that shows you just how much we've moved and how sort of nervy we are at this moment.
Yeah, I mean, and you and I looked at this. If you look at the reaction function, it's much more aggressive in Europe, less so in oil. You looked at the bond market. They were down 10 basis points. They recovered. Yen, money is flowing into yen. It's the very immediate knee-jerk headline risk-off restraint.
Yeah, we'll see what sticks. And if anything, to your point, Manus, it just underscores the volatility that we might be dealing with in 2025. The year is coming to a close. Already, strategists have begun to release their year-end targets for the S&P. Over the weekend, the usually bearish Mike Wilson of Morgan Stanley set a more bullish price target of 6,500 by year-end. Goldman Sachs' David Kostin matched his call, writing, in our baseline macro outlook, the economy and earnings continue to grow and bond yields remain around current levels. Joining us now is Emma Wall, Head of Investment Analysis and Research at Hargreaves Lansdowne. Emma, how do you even think about next year when you're going to have a new president in the United States, different policy, and yet again this morning we're reminded of the geopolitical risk happening around the world?
Yeah, so we think the two big words for 2025 are going to be volatility and value. So volatility, we've already started to see it this year, with macroeconomic outlooks changing all the time, bond yields jumping all over the place. I mean, it's been quite an extraordinary time for bond yields that you've had 2 cuts from the Federal Reserve, and yet, your 2, your 5, and your 10 are above 4% yields, higher in some cases than they were in July before the 2 cuts. And that just really is showing actually how much uncertainty there is going into 2025. What the market thinks President Trump will be like in terms of expenditure. You know, we think there's going to be spend in terms of growth. We are bullish, actually, on US equities, although we actually think the value is in the smaller companies, you know, or US smaller companies, which in the UK would be multi-mega caps. But US smallers, more domestically focused, those that aren't going to be so hit by tariffs. But yeah, certainly volatility across asset classes and value, as in take it where you can. It's going to be bumpy. Like today, an opportunity perhaps to buy in while valuations are slightly depressed.
Emma, good morning to you. Look, as I said at the start of the show, we've just had a mini refresher course in the jolt from geopolitical headlines. I know that you're a buyer of gold. You see reaction function in bunds. You see it in yen. Is this where you see gold acting as some form of a geopolitical hedge?
Yeah, gold is a really interesting one. It's been, you know, ignoring actually the last few weeks where you see some softness, which we think actually is a reaction of hot money. So on the result from Trump of that clean sweep, and you saw that US equity bounce, we think the gold came down in part because people were using it for liquidity. So they were just deploying it into that Trump bump, that US equity rally. But we think actually the levels akin to what Goldman Sachs have predicted for gold over next year, reaching around 3,000, are right. So not a huge rally from here, but holding, retaining its value. So we think in a well-diversified portfolio, actually, gold is less of an alpha generator and it's more of, you know, it's capital preservation. It's actually there to provide some diversification where you see volatility in bonds, in equities, to really act as a ballast there for your portfolio.
That I'm really interested in, Emma, because I've seen a lot of commentary over the past, honestly, year, saying that bonds are not the haven that they once were, that we shouldn't get used to going back to a world where we have negative bond equity correlation. I wonder if today disproves that. I know we only got some of these geopolitical headlines a mere 45 minutes ago, but can bonds be that thing in portfolio that in moments of risk off, bonds can gain?
Yeah, it's an interesting point. We spend quite a lot of time talking about the 60-40 portfolio and is it dead? I mean, ultimately, there's a lot of studies to show that it doesn't work in the way that it used to, but partly for a number of reasons. You know, high-frequency trading, the amount of liquidity in the market, alternatives really you need in the mix in order to provide that diversification. What I would say about bonds is we are bullish on fixed income going into 2025 because ultimately, other than the correlation with equities, why do you buy bonds? You buy bonds for income, and bonds are paying you income right now, well above inflation rates. You know, inflation has come right down on both sides of the pond. And so you are getting a real rate of return, a real rate of income from fixed income without really having to take on too much risk. We're not talking about high yield here. We're not talking about sex and violence. We're talking about T-bonds. We're talking about gilts. So from your, what would you consider your safest fixed income assets, you're able to get a real rate of return. You're being rewarded in the near term with income. And actually, although yields may not come down in a linear way that we were expecting, say, this time last year, do you remember what the outlook was for rate cuts this time last year? You will still be rewarded in the interim. So volatility, yes, but total return on the 3-5 year basis, absolutely, and income for now.
Brilliant. Sex and violence of the high yield market. I wonder how you'd refer to the investment grade market and to treasuries. We've yet to find our real sort of fair value in treasuries. Our next guest coming up after you saying that, you know, Donald Trump is a human steepener. Do you think every time we've seen this 4.5%, it's where real money comes in? Is that what caps us for now?
Yeah, I do, especially with inflation coming down. You know, there was a point where inflation and yields were on par, and so you didn't see that effect. But definitely 4.5 seems to be that magic number where you see that flow. I do agree that Trump policies does change the trajectory for yields, and actually not just in T-bonds. You know, we do have a global impact of the tariffs, and we're expecting here in the UK, as I'm talking to you, gilt yields to be higher actually going into 2025 than we were a year ago, in part because of Trump's policies. So I do think that yields will be higher for longer, especially since then we were expecting even 6 months ago, but long term that trajectory is down. So as I say, income for now and total return over that 3-5 year period.
Okay, bank those coupons. Emma, thank you very much. Emma Wall of Hargreaves Lansdown. Other stories trending on your Bloomberg terminal this morning. This is what we got for you. Blackstone is close to an agreement to acquire the sandwich chain Jersey Mike's for around $8 billion. That includes debt, according to a person familiar with the matter. A sale could be announced as soon as this week, but a final deal hasn't been reached, and the talks could end without one.
Nestle trimmed its medium-term profitability target and will increase spending to promote its brands. Its new CEO is looking to revive its sluggish growth and restore investor confidence It had relied on higher prices to drive sales during the inflationary period coming out of the pandemic.
Swiss watch exports fell for a second straight month as a sharp drop in shipments to China offset the growth in the U.S. The China and Hong Kong downturn is being countered by solid growth in exports to the U.S. and Japan, with U.S. shipments rising 11% and Japan rising 20%.
Coming up, Manis, we are going to talk about Trump's picks and what that might mean for this market.
We'll also have a conversation with Marco Papik, Chief Strategist over at BCA Research, on the state of the Trump trades. This is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
It's Bloomberg Brief. I'm Manis Craney alongside Danny Burgett here in New York. Let's just check out what's going on with the bond markets. We've had a refresher course in the jolt of headlines. These are yields dropping more aggressively in Europe, Danny, than they are in the United States at the moment. We've got RBC Ukraine reporting the first strikes on Russian territory by Ukraine. And then you have this new top line that Putin has expanded the nuclear doctrine in terms of how and when they might use nuclear weapons in response to any aggression. So ground zero for the very first response mechanism is in the bond and the FX market.
Yeah, and equities, I should say, in Europe selling off much harder than that of the U.S., down 2 1/3 in the FTSE MIB in Italy. Let's get straight to Mark Champion of Bloomberg Opinion on this. Mark, so Manis mentioned all the various headlines that we were watching out for this morning. Can you just run us through the significance of them and whether any of it is escalatory?
Right. So essentially, you know, what the Russians have done is to say that a nuclear update that they said was coming some time ago. They released the details of what it was going to say, and now they say, well, today Putin signed it. So I think essentially what they're trying to do, you know, they had intended that update to put pressure, as all of the nuclear threats. So they're designed to put pressure on the Americans and the Europeans to limit what they give to the Ukrainians. It's been a very successful policy. And then the question, you know, you have to ask is, you know, what has changed this time? Does this, you know, new doctrine, will it sort of materially change anything? There's a couple of things to say. First of all, that it's not the actual doctrine that decides what Putin does in an emergency, what the army does, you know, that sort of process. That is all classified and may not have changed at all. Second thing to say, sorry.
Sorry, no, go ahead. Please finish, Mark.
No, and then the second thing to say is that, so we really, you know, these doctrines are the public doctrine. They're for diplomatic use, for public use to kind of set the frame. The previous doctrine didn't limit what Putin could do. He is all-powerful in that sense. He has the ability to do what he thinks is necessary. And this one won't either. So in some ways, nothing has changed. The only question is, he's sending a signal, and the question to the analysts in the White House, in U.S. security, European security, defense establishment, is to decide: does this signal mean that he really is serious now, that something has changed, and he's willing to push the nuclear button? And my own view on that is simply everything is possible, but would not make any sense. He is now winning in the war. At certain points during the war, he wasn't winning, and he didn't use the nuclear option then. He's now winning. And secondly, he has a new U.S. administration coming in that has said it wants to end the war and is willing to put much more pressure on the Ukrainians than the current one. So it would be a strange time to make this move, and it is very difficult and costly for him to use nuclear weapons.
Well, it could well be that he's using this window in between Biden exiting and Trump arriving as his opportunity to escalate verbally. He does say that non-nuclear states that are supported by other nuclear powers can be a target. So this verbal deterrence, Mark, in many ways, it's to try and counteract the last push forward by Zelensky to try and get some upper hand before these negotiations start.
I think that's absolutely right, and that's how we should see it, how we should frame it. The question then is, what do we think this really means? As you've reported, the first attack has been used. The language even in this updated doctrine says what's required is a mass attack. Conventional attack would be sufficient on Russian territory. One ATACMS missile is not a mass attack.
Okay, Mark, just as you're finishing your conversation, we're showing live pictures of President Zelensky. He's going to be addressing the European Parliament. Let's just take a moment there. Okay. We'll keep you abreast of any headlines that come through from the Ukrainian President Zelensky addressing a special plenary session, I should say, of the European Parliament, marking 1,000 days of Russia's invasion. Right here in the U.S., Bloomberg is learning that the President-elect Donald Trump is considering appointing Kevin Warsh, the former Federal Reserve official, as Treasury Secretary. That would be alongside the hedge fund manager Scott Bessent as the director of the White House's National Economic Committee. Our senior editor, Michael Shepard, joins us from Washington. So, Shep, the markets were all G'd up for a Bessent Treasury Secretary. We understand that Bessent won't accept the proposition to him until he knows who the Treasury Secretary is. So again, this is like a cliffhanger, isn't it?
It's really turned into a cliffhanger, and it is taking a bit longer than we had expected. I think a week ago, we were speaking about this on air about how we might see it even before last weekend. But the process is dragging out. Trump is to meet with Warsh later this week. But the two things that these men bring to this role, to these roles, possibly are a familiarity with Donald Trump and Wall Street pedigree, which is really crucial for the president-elect. Warsh was considered by Trump during his first term as a possible head of the Federal Reserve. And Scott Bessent, of course, has backed the president financially and also in kind through his comeback campaign. And he's been advising the president even through this process. So we'll see how this plays out this week. Each of these men would be able to speak to Wall Street and bridge the gap between the financial industry and Washington.
Shep, I guess one of the confusing things about Warsh specifically is part of the reason this fight broke out into the public is you had someone like Elon Musk saying that Scott Bessent was someone who was just status quo. Couldn't a lot of Trump allies make the same argument about Kevin Warsh? I mean, this is a man in 2010 who argued very publicly for open and free trade in markets and against protectionism.
Danny, that's a great point. And that I think highlights the underlying tension in the Trump camp right now. They would like to go far, but then how far do they take it? Because the markets will start to see some of these policies, including his promises to impose wide-scale tariffs on the European Union and even heavier duties on goods coming from China, his immigration plans, and his tax cuts. All of these present different forms of risk. Even as they're enthusiastic about tax cuts and everything else, there are latent risks in all of this, and they need someone who can communicate effectively. And if you bring it to the markets, and if you have somebody who is too iconoclastic or unfamiliar with the major Wall Street trading houses and global financial counterparts, it could be problematic. And Warsh solves that problem in a way, even if in his past he has expressed some misgivings about the kinds of tariffs that Donald Trump is intending to impose.
Okay, Michael, thank you very much. Great reporting, Mike Shepard there in Washington. Well, stock in Google this morning are falling pre-market after the Bloomberg scoop. The DOJ is looking to force the company to sell the Chrome browser after a judge ruled that it was monopolizing the search market. What would the impact? Tamlin Basin is of Bloomberg Intelligence. So here we are, again, another cliffhanger. This was started in the first Trump presidency. Here we are. The possibility is that the Chrome browser may have to be split off. That could be seriously injurious to their AI future, couldn't it, if that's the road that we go?
Yeah, absolutely. So the Chrome browser is really essential for Google. It's what they get a lot of data on users browsing Chrome browser. They use that data to feed in their advertising practice. Obviously, it helps support their search monopoly, and this is where the sort of the underlying case was on Google search monopoly. And earlier this year, the federal judge did find against Google in a liability trial on search, saying that they used illegal practices to support that monopoly. And so what we're looking at now is heading into April, there's going to be a trial on remedies. And this, what we have today, is the DOJ putting forth what they think those remedies should be. And of course, the most onerous of those would be splitting up and forcing Google to sell Chrome. We don't know how the judge is going to decide, but this is sort of the DOJ putting forward what they think the remedy should be.
Well, in April, it'll be a completely different DOJ run by, well, who knows at this point. Tamlin, I mean, what does that mean in terms of some of the last gasp of the Biden administration trying to make some of these efforts come to fruition? Can they stick in a second Trump term?
Yeah, absolutely. And I think to Manus's point that this was a case specifically that was brought under Trump's first administration. So in terms of this case, I think the judge isn't going to pay too much attention to who's in the White House. The judge is going to look at sort of the remedies proffered by the DOJ and by Google. But it is the big, larger question out there is how is tech enforcement going to look under a second Trump administration. Now, we do think there might be a relaxing on things like M&A perhaps, but a lot of it really is going to depend on who Trump puts in place in these key positions, both at the DOJ and at the FTC. So we're really going to have to see the personnel that he puts forward. But generally, regulating against big tech has been fairly bipartisan over the last 5 to 10 years or so. So it might not be a huge change going forward.
Well, there's been a lot of discussion about Lina Khan in terms of her future. Tamlin, thank you very much. Tamlin Basin there of Bloomberg Intelligence. Quick snapshot of markets. We have a small jolt this morning. One could say S&P futures down 0.4%. The narrative is, of course, that the first strike from Ukraine into Russian territory, and then we have this approval by President Putin in terms of expanding the nuclear weapons doctrine. How much of that is new news in terms of the expansion of the doctrine, Danny, and how much of it is a refresher course in jolted by the headlines? And we're going to have more of this. U.S. stocks are lower by 31%.
you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics and math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
It's your Bloomberg Brief, Danny Berger, alongside Manus Cranny in New York. We're monitoring markets going squarely into risk-off with fears of growing tension. You're looking now at Ukrainian President Zelensky addressing a special plenary session of European Parliament, marking 1,000 days of Russian invasion. Manus, he's saying that he's concerned that North Korean troops in Russia might grow to 100,000. This is various headlines hitting the tape on fears of a nuclear doctrine getting signed by Putin in Russia.
Yeah, and the escalation has been pretty fast, hasn't it, Danny, between the amount of troops arriving to help Putin in the war effort and then the U.S. shifting on its position on these longer-range weapons, which have now been activated. And as Zelensky himself said, it's action, not words, that matter.
Yeah, and here's the reaction in markets. I mean, it's Russell 2000 futures selling off the most, which doesn't make sense because these are domestic companies. So maybe it just underscores the fact that it is just risk-off everywhere you look. Looking forward then to catching up with Marco Papik of BCA Research. He's going to give us his take on the latest.
What's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, If a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about. They fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you
I had actually run tech banking and took Google Public, so I had a little sneak preview.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
From our global headquarters in New York, welcome to Bloomberg Brief. Danny Berger alongside Manus Cranny. Let's set your agenda.
Stocks turn lower, bonds rally. Local reports state Ukraine has carried out its first strike in Russia using American-made missiles. President Putin approves expanded use of nuclear weapons. Narrowing the search, President-elect Donald Trump is said to be considering Kevin Warsh for Treasury Secretary, Scott Bessent for the NEC. The last push from Biden's DOJ. The plan? Split Google and its Chrome browser. More on the Bloomberg Scoop coming up. Danny, good morning.
Manus, a quick whip through markets because they were shook this morning. Headlines first coming out of Putin signing an expanded nuclear doctrine, which was expected. And then the headlines that, according to local sources in Ukraine, that Ukraine has looking at launching the first inside Russian territory long-range missiles coming from the U.S. You can see the reaction is most acute in Russell 2000 futures, where I said this before, these are domestic stocks. They probably shouldn't be impacted, but just shows the impulse and the nerves in these markets. Europe stock 600 on the bottom of your screen selling off more. Same goes to the bond market. European bonds rallying more, but bonds rallying across the board. Maybe they are the haven that we wanted. The euro also turning lower. The dollar had snapped its 7-day winning streak, but man is stronger this morning again on geopolitics and haven.
I think we've just had a refresher course in knee-jerk reaction to headline news. The first strikes by Ukraine into Russian territory. What does that really mean? Is the updated doctrine really a renewal of pressure? Is it verbal pressure that Putin is so good at capitalizing on the vacuum here in the United States of America between exiting Biden and entering Trump?
I just think the market reaction is so telling, Manus. The fact that you can have oil barely react to these headlines and that you can have something like small cap selling off more, I think it just shows how edgy this market is and that it doesn't take a lot to really throw it off when we have run up so much. So we'll see how much of this sticks. We'll see how much of this is an escalation or not. But for the meantime, it is having a real impact.
And it's much more of a negative impact on European assets, on the euro, on the stock 600 than it is to some of the US assets, despite the Russell. She'll be on Twitter later on telling you about the value in the Russell. Our guest this morning is Marco Papich, Chief Strategist at BCA Research. Marco, good morning. Just listening to the headlines, the first salvo from Ukraine into Russia, Putin expanding the use of the nuclear weapons doctrine. I put it that this is a refresher course for all of us in the jolts that we're going to have to get used to. The first reaction to this sequence this morning.
Well, I think that what's happening here is the Biden administration is trying to lock in the incoming Trump administration in a certain course. And that's why they allowed this use of long-range missiles ahead of the inauguration. It reminds me of when George H.W. Bush actually committed troops to Somalia in 1992 at the end of his term, so that the incoming populist president, isolationist at the time, people thought President Clinton would be locked into the New World Order. And so I think that's a very similar idea here. I don't think that Putin has a reason to overreact. That would be self-defeating. Obviously, he has an incoming administration that has stated it wants to negotiate. Everyone's trying to ratchet tensions ahead of those negotiations. That does tend to happen whenever we have a military conflict. In the last sort of gasp of a conflict, you try to acquire as much territory, you try to ratchet tensions, so you have a better negotiating position. I think that's what's going on.
So to be clear, this is all just a precursor to maybe the war ending, to some sort of negotiation being formed. Is that what you're saying?
You actually see this in a lot of military conflicts, that in the very end, that's when both sides try to ratchet up territorial acquisition. I mean, I see Ukrainian acquisition in Russia of the Kursk Oblast when they invaded Russia in the same light. It's a way to bargain. You increase your chip stack so you can actually trade it away. And so, yes, I think that obviously Putin is going to try to also flag aggression and assertiveness and willingness to continue the conflict so that the price for negotiations for the West becomes higher.
What is the most important way to approach trading these markets over the next 4 years? You sat down in the seat and we were chatting casually about how much volatility there will be to come. But this is about positioning in a framework, isn't it?
Yes, absolutely. And also knowing where the macro fundamentals are. You know, so I think one of the things about geopolitics is often investors overstate the tactical importance of geopolitics. I actually think geopolitics and politics is far more important for your strategic asset allocation than it is for tactical. Oftentimes, the way to actually trade politics and geopolitics is to fade the risks. You mentioned oil didn't react to the latest Russia-Ukraine tensions. You know why? Because we learned in 2022 the risk of going long oil because an oil producer is engaged in war. I mean, how did that work out? Oil prices crashed in 2022 because the market fundamentals were not bullish commodities at the time.
So that's the geopolitics of it all, but there's also the volatility of just Trump. And I think even before he's been inaugurated, we're being inundated with headlines and trying to figure out what does it mean? What does his Treasury Secretary picks mean? What is your recommendation to clients as they sort through all of that, as they try to decide what is market importance, what is market moving, and what is not?
So I think that over the past 6-8 months, I think we've murdered too many Excel cells in trying to, in trying to compute all the different policies of the Trump administration. And I think that's very difficult because there's so many. There's trade, there's tariffs, there's migration, there's growth, there's tax cuts. I wanna just be very simple, stupid almost. I want to focus on what we know most. And what we know clearest is that his tax cut policies are, stimulative to the economy. And so that's why I've called Trump a human steepener. Yeah. In a way, that's happened already. And now the bond market is kind of digesting that for a period of time. I do think the Treasury Secretary pick really matters. I think it buys the administration time before they have to propose legislation. So I think the team that's being, sort of quoted now, you got Warsh in Treasury, you've got Bessent in NEC, very good. That means Bessent is going to be very close, by the way. NEC is important. You're in the White House. You're close to the president. You're going to have actually maybe even more influence.
I mean, Bessent, we understand, won't accept the job until he knows who the Treasury Secretary is, and that kind of makes sense when you've been in the running. In terms of the program for debt, and that is what matters most to this Treasury market. So that pairing, what does that say to you about the risk on the fiscal front next year and the debt front?
So I would say that the risk is pushed off into the legislative phase. And what I mean by that is that had he picked a Treasury Secretary that Wall Street didn't have confidence in, I could see a bond market riot like tomorrow. Well, literally today. Bond yields go up. But if you have a competent team that knows how to conduct open mouth operations, all important OMOs, then those yields can settle. And then we have to wait for the legislation, the legislative process, the reconciliation bill that will start being put together in April and May. The problem is I don't see how President Trump tempers his most profligate promises without more pressure from the yields. So I would say that on a 0 to 6 month horizon, I can see yields going higher. Then I see this team that he has assembled telling President Trump, look, we need to temper the impact on the deficit. And then I see yields going lower than maybe expected on a 6 to 24 month horizon.
So you think Trump and his team can be regulated by this bond market? Because there's been a lot of thoughts that it's the equity market that he cares about, and the sequencing matters a lot as to whether he does tax cuts first or tariffs. So how do you see the bond market being the thing that regulates them? Again, even when we've seen auctions come on and there are fears of, we're going to have a failed auction, it's going to look something like the UK, and it just never materializes.
Well, let's wait a little bit. Let's give the bond market a little bit of time. What I would say, everyone can be tempered by the bond market. What did James Carville say, right? I want to be reincarnated as a bond market. Everyone's afraid of you. And I think in 1994, we had the bond market riot last time in the U.S. history, 20 years ago. It wasn't the foreigners that sold the treasuries. It was domestic private holders. U.S. was a reserve currency. I think that can be repeated. To your question, equities versus bond, what will discipline President Trump? Well, I think both. If we get into 475 territory on the 10-year yield, it's probably going to have an impact on equities, negative. And especially the favorite trade that everyone has on right now is what? Small caps, right? That's not going to work if those yields keep going higher. Regional banks, that's not going to work if yields go higher. Regional banks, I mean, that's
Do you think
not gonna
475 is enough to temper perhaps the most profligate policies? I mean, who blinks first? The Trump put or the Fed put? I mean, the Fed put is open-ended, but Trump blinks first.
I think that Trump will blink first, and I think that, you know, in previous iterations of this kind of a situation, the central bank has always been supportive of their sovereign debt market, obviously. They don't play politics. They come in and support, but they do extract concessions. What did Mario Draghi want for purchases of peripheral debt in 2011, 2012? He wanted concessions on structural reforms and fiscal policy from Italy and Spain. What did the BOE want from Liz Truss?
Yes.
Right? So I think that the big surprise, I think, from the next 6 to 12 months, as we digest all these policies, the big surprise will be actually far lower fiscal thrust, far lower contribution of fiscal policy and G on growth, because Trump will eventually be disciplined by the bond market.
I also wonder, to that point, if something that's going to hold back not just the U.S., but global governments, this idea we've had regime shifts everywhere, and it's largely due to inflation. Do you think governments are going to learn the lesson from that, that if we are in a crisis, if something like COVID happens again, that they're not going to want to spend their way out of it for fear of this very moment that we're in?
So, you know, Danny, I've kind of really made a point over the last 4 or 5 years arguing that we have moved away from Washington consensus to something new. And I've called that something new the Buenos Aires consensus. I was looking for a, you know, fancy term, so I just picked on Argentina. Well, it's interesting because the one country that's moved actually the furthest away from this kind of profligate, dirigist, you know, statist way of conducting economic policy is actually Argentina. And you're starting to see anomalies across the developed and emerging market world. Canada is about to elect a libertarian-leaning prime minister. Germany is about to have a chancellor who wrote a book titled More Capitalism. And yes, in the US, you have a team. I mean, Scott Bessent was on Nikki Haley's team. I mean, this, you know, and Nikki Haley ran on effectively a laissez-faire austerity, Margaret Thatcher supply-side reform policy. So I do think something is happening. I think we've peaked with profligacy, and I think we're slowly moving towards actually more laissez-faire capitalism without anyone expressly voting for it, but policymakers can sense and that they have to move that way. Why? Bond market is a disciplining mechanism. It's a material constraint, and I always emphasize material constraints over policymaker preferences.
Right. No one wants to be the leader that upsets the bond market. Marco, so wonderful to have you on. Please come join us whenever you want to move away from sunny California and into dark and cold early mornings in New York. Marco Popic of BCA Research. Okay, coming up, we are going to dive into big tech and some of the ramifications there of Biden's DOJ's last gasp. This is Bloomberg.
Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
About artificial intelligence. Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
President-elect Donald Trump is said to be considering appointing Kevin Warsh, a former Fed official, as Treasury Secretary, alongside hedge fund manager Scott Bessent as the director of the White House's National Economic Council. Let's get over to Bloomberg government reporter Kate Ackley, who joins us from Washington for more. Kate, what do we understand at this point?
Well, good morning. Nice to be with you. This is a team that I think Wall Street would celebrate or at least be comfortable with. We expected to hear a Treasury Secretary pick. Last week, there's been some behind-the-scenes sort of back and forth infighting among, who's going to be in that role, which is subject to Senate confirmation, the Treasury Secretary. But as things have moved forward this week, it seems like they're putting together a team that would broadly, be embraced by Wall Street.
Look, one of the big issues is we understand Wash won't sign on to NEC until he knows who the Treasury Secretary is. Sorry, Bessent won't sign on until he knows who the Treasury Secretary is. And part of the discussion around Kevin Wash is it's about that loyalty to disruption, that loyalty to tariffs. And I think Danny's mentioned it, various people have mentioned it. This is the 2011 op-ed authorized with Jeb Bush, which is about a slightly different opinion, perhaps, to what Trump wants.
Right, that's that sort of establishment Republican versus the populism that we see with the Trump-Vance team. So there's a balance going on there.
Okay, so we're going to try to get that balance, which, by the way, Vance has been absent from all of Trump's photo ops in his UFC days. We're also going to have today being the deadline for Trump's hush money case to either proceed to sentencing or delayed. I mean, this is something to keep in mind, that these things are still happening in the background. Kate, how does it color this moment?
Well, I mean, Trump was reelected knowing that he had this conviction. So it wasn't a surprise there. And this is a pivotal day. This could be pushed off for 4 years. It could be completely scrapped. Or there could be the sentencing hanging in the balance as the Trump team puts together the incoming administration. So a lot going on today.
There is indeed. Kate, thank you very much. Bloomberg government reporter Kate Ackley on the trail in Washington. President Biden's Justice Department making the final push to crack down on big tech. The DOJ is looking to force Google to sell the Chrome browser. Now, this comes after the judge ruled in August that it's monopolizing the search market. Tamlin Basson is with Bloomberg Intelligence. Tamlin, good morning. This is perhaps the worst remedy of all. This is the very core of the future for them in regards to their AI product and the development. Is this the worst case scenario?
Yeah, I mean, this is a pretty frightening recommendation by the DOJ for Google, just because how much it relies on that Chrome browser. This is something they rely on to really get a lot of data that they then use in their advertising practices. However, I should point out that this is just merely the recommendation of Biden's Department of Justice. This is a recommendation that's going to go into a trial that the judge is going to hold on remedies. That trial is going to be held in April. So really right now, we're just seeing what the DOJ is suggesting the judge do. It's by no means clear that the judge is going to follow those recommendations.
There's been so much back and forth about what a Trump term would mean for big tech. In Vance, you have someone who likes little tech. You have Trump, who's both criticized and embraced big tech in the past. These kinds of actions, which you and Manis have rightly point out that this specific case was brought under a Trump presidency, Is it likely to change once Trump comes into office? Is he more likely to be friendly or more scrutinous to big tech?
Yeah, I mean, to some extent, that's an open-ended question because we don't yet know the kind of personnel he's going to put in these key positions, both at DOJ, at the FTC. So a lot of this is going to be personality-driven based on who he's going to nominate for those positions. But I think you're absolutely right. Trump hasn't been all that favorable to the big tech community, and we don't necessarily think that's going to entirely change going forward under the new administration. But the details of that are going to depend on who he's going to select for these positions.
Talk to me a little bit about Huawei, because obviously they've had restriction on their access to some of the leading technology. What does this tell you about the regulatory environment for tech companies and where they find themselves now? Because as we go forward, again, we've got a president and a vice president talking about the whole tech sector as well and about the censorship. That's one aspect from J.D. Vance. But what about the regulation going forward?
Yeah, and I think if you look at Huawei and this sort of supply chain bottleneck that they're experiencing really is the intended result of these restrictions that the U.S. led in placing on Huawei. And I think the read-through between both Google and Huawei is that this is just sort of the regulatory environment that the big tech sector is going to face going forward. And I think it's not just the U.S., it's also Europe. This is sort of just the new status quo that I think the sector is going to have to start dealing with in the years to come. But we don't really see that relenting anytime soon.
Okay, Tamlin, thank you very much. Tamlin Basson there from Bloomberg Intelligence. Another stock that we're tracking today, it's Walmart. We're going to get the numbers pre-market. It's just ahead of the third quarter earnings. Eric Fanner is with us. So Walmart, are we going to spend on this holiday season? What's the outlook in terms of the delivery? They've been working really, really hard with their club program to overcome perhaps some of the less of the appetite from the lower end of the market, haven't they?
Yeah, that's right. I mean, Walmart's been doing really well of late. They had a super strong second quarter, upgraded their guidance at that point. The shares have been doing really well since then. So I think, there's anticipation that that momentum is going to continue. I mean, as you say, the big question at this point now is the holiday season. How will they do during that period? It's a little bit of an unusual holiday season. It's a couple of days shorter than last year, than typical. So there's some uncertainty. Obviously, you've got the whole election effect, new administration coming in, talk of tariffs, interest rates are still, kind of sticky, which is, kind of curtailed some of the spending on home improvement, things like that. But the food business for Walmart has been doing really well and taking up the slack. So, that's widely expected, I think, to continue. So we'll have to see, how well do they, lift other boats. But Walmart itself is, has been cruising along.
Yeah, we'll get those earnings in about 1 hour and 10 minutes, Eric. We'll also get Lowe's earnings, too. Home Depot had a pretty strong showing thanks to the fact that there were hurricane effects and people had to rebuild and get outside and fix what had been broken. But it is a very strong consumer at this moment, but a weak housing market. How is that turning out for some of these home improvement companies?
Yeah, that's right. I mean, as you said, Home Depot, some days ago, they upgraded, but it was from a very weak base. I mean, as you said, the question there was the housing market to some extent. That's been hanging over them and Lowe's, with people kind of unwilling to spend on big ticket stuff for their houses, fewer houses being sold and bought, and so that kind of weighs on that spending. Now, that the interest rates have been coming down a bit, so there's some sense that might be ending. As you said, the hurricanes and the other weather effects were kind of a mild positive for Home Depot. There's some expectation that Lowe's could get a similar or even potentially greater benefit from that than Home Depot. So that kind of mitigates some of the weakness that we've seen overall in the housing market. But it's clearly there's still kind of a bit of a mixed bag there. Not necessarily the same kind of holiday shopping boost that you might see at Walmart, for instance.
I believe it is 5 days less we will get this holiday season to get our shopping in. So good luck to everybody. Eric, thank you so much. Bloomberg's Eric Fanner. A quick check on markets this morning. As we've been tracking a textbook risk-off day, stocks lower. Russell 2000 leads the pack lower, as does Europe. Same goes for bonds. Bond yields are moving lower, Manus, and the most of which is coming from Europe.
is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers. You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Let's get you set up for your trading day on this Tuesday. Walmart and Lowe's, they will be reporting earnings before the bell. We'll get some economic data. U.S. housing starts. That's at 8:30 a.m. Eastern. And then we'll get the ruling on President-elect Trump's hush money case in New York. That will take place later today. Manis.
Danny, some of the micro movers on defense, Lockheed Martin and General Dynamics, both defense stocks gaining on the local media in Ukraine, saying armed forces have carried out their first strike on Russian territory. Supermicro surging on reporting that it hired a new auditor and filed a plan to come into compliance with NASDAQ listing requirements. But bond markets are the ground zero for reacting to the Ukraine news on missiles being launched and the change, or the signing off, I should say, in the doctrine on the use of nuclear arms by Putin.
Yeah, a lot of comments have been made over the past year that bonds aren't providing a haven. Maybe they are now. You can see 10-year yields dipping on that news. I should say European equities also selling off this morning. European stocks 100 down some 0.9%. That's it for your brief. Surveillance is ahead.
In terms of how we should deal with the challenges that are, facing the world and also internally, I think it's just an opportunity also, an angle. And you could see that in a lot of activities that are picking up in this region, simply because it's a region that is actually a bright spot amongst very few in the world today. And people always talk about the flavor of the month. Actually, I don't want to sound too, large-headed, but actually we will be the flavor of decades. We are determined, we have long-term plans, and we are very clear and committed on our commitment to the investment community at large. I'm not talking about one individual country, but at large in the GCC, that we mean business that we are willing to take every step possible to make it easier for investors to do business in the region, that we are willing to do a lot of structural changes, including actually making it very predictable, very consistent policies.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Our base case is really that there will be a cut in December, a 25 basis point cut in December.
We have in our baseline that the Fed's cutting to 3.5.
They don't have to go too much further to be at the right rate for this level of inflation.
We're priced for strong growth and additional term premium.
The economy's in a really good space.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday after snapping a two-day losing streak on the S&P 500 and a five-day slide on the NASDAQ. Equities resume the decline. We're down 0.4% on the S&P. On the NASDAQ, we're down by 0.2 on the Russell. The small caps getting hammered negative by 1.1. In the bond market, there's a bid on a 2-year, on a 10-year, on a 30-year. On a 2-year, we're down 5 basis points. Likewise, on a 10-year, that yield 436.28. On this headline out of Europe, Lisa, Ukraine striking inside Russia using U.S. weapons.
Yeah, and there's fear at the same time that you have Russia coming out and saying that they are amending their doctrine, the nuclear doctrine, to basically say that they will retaliate with nuclear weapons if a non-nuclear state has a conventional weapon attack on their land while being backed by a nuclear state. It is a very specific kind of protocol, but the question here is, what does this tell us? A, about the knee-jerk reaction, oil prices up, Treasury yields down, and what does this tell us about the path of travel and how rocky it could be heading into the next couple of
Well, the path of travel is going to be even more interesting because we have President-elect Donald Trump on the campaign trail vowing to end this war. And right now what you could see is rhetoric and movement, potentially both sides, wanting to make sure that they have the most leverage going into what would be end war. But this certainly today is an escalation. Ukraine was given the green light to go ahead, and they did so.
Lisa asked the question, what does it tell us? What it tells us this morning is when things go wrong, people buy bonds. And people buy U.S. Treasuries still. That's what it tells us.
To me, that's my biggest takeaway, because we can discuss whether it's signal, whether it's noise, et cetera, but from a market's perspective, bonds are still bid when there is geopolitical trouble. When there is some sort of sell-off because of a catalyst in equity markets, bonds get stronger. So to me, does this sort of rebuke some of the runaway yields and new regime that some people were talking about?
Bond yields lower this morning by 5 basis points, right the way through the curve. Elsewhere, looking at foreign exchange, the euro shaping up as follows against the US dollar after a really strong run of dollar strength. Euro dollar 105.63. Lisa, a slightly weaker euro this morning.
This really goes to dollar strength across the board, although at the same time you start to wonder about what kind of impetus there's going to be for some sort of strength in Europe. You do see the dollar bid. You do see some marginal strength, though, in the yen, in the Swiss franc. So again, what are the haven currencies? Although I don't want to get too carried away about calling the yen a haven currency or calling the Swiss franc a currency, although good morning, Tom Keene.
It hasn't been much of a haven over the last year at least. Coming up on this program this hour, Russ Kostrick of BlackRock, as stocks fall on geopolitical risk. We'll speak to John Lieber of Eurasia Group on the race to be the next Treasury Secretary, and we'll catch up with Kit Jukes of SocGen on how much further the Trump trade can go. We begin this hour with stocks edging lower as traders weigh potential Trump policies and concerns grow over the conflict in Ukraine. Russ Kostrick of BlackRock staying long equities. While we think the market will need to digest the post-election rally, we expect stocks to end the year higher. Russ joins us now for more. Russ, good morning to you, sir. We need to start with bad news and the capacity to absorb bad news in this equity market. How great is that capacity this morning?
Well, good morning, Jonathan. Look, we have not had any geopolitical disruptions for some time, and the reality is the market has looked past a lot of the geopolitical risk, whether that was the conflict in Ukraine, the conflict in the Middle East. So there's not a lot of risk premium baked into markets. That said, I'd say as of now, at least, the reaction from markets is fairly modest. The S&P down less than 0.5%, and still near an all-time high. So I do think markets are still focused on the fundamentals unless we see a more meaningful escalation and or a more meaningful move in energy prices, which, as we all know, have been remarkably contained given all the potential for risk in the world.
The same cannot be said for the Europeans. European equity markets are down by more than 1 full percentage point, which leads me to your outlook for 2025. Significantly overweight the United States. Russ, are you just doubling down on U.S. exceptionalism?
Well, we're going with where we see the best companies, I think is the short answer. So there are definitely differences between the U.S. and Europe and Japan. The most obvious, a much stronger economy. You're less exposed to some of the geopolitical risks out there, given the huge size of the domestic market. But, a lot of this, you come to the same conclusion, even when you look at the market from a completely bottom-up basis. And we focus on the basics, looking at cash flow, looking at profitability, looking at earnings growth. It is stronger in the U.S. So when we talk about the reaction in Europe, absolutely. Part of that is the proximity to the conflict in the Ukraine. But part of this is the U.S. has just been a stronger market with better earnings and better cash flow.
There is this question, though, Russ, on a relative basis, just whether people are overweighting this idea of a soft landing or even a reacceleration with American exceptionalism, given that pretty much every outlook that we have read so far talks about 10% or more gains in the S&P 500 next year, as well as the U.S. outperforming. At what point do you think this is all baked in at a time where some of the forward looks that we're hearing from companies are not outperforming to the degree that many people were expecting?
So at least I think it's fair. I mean, and there's no doubt the U.S. is the most expensive market. Now, some of that has to do with sector composition, but even when you adjust for that, the U.S. is more expensive. Again, I think it's more expensive for a reason. But here's the sort of the challenge. Generally, when you think about other non-U.S. developed markets outperforming, whether it's Japan or Europe, we all know they tend to be more weighted towards cyclical companies. They generally outperform when you're expecting a reacceleration in global growth. That's not the base case. We do think the U.S. is going to continue to grow at or above trend. But you look at Europe, you look at Japan, you look at China, you don't come to the same conclusion. So while I do think the U.S. is more expensive on a relative basis, it's just not clear you're going to get the conditions in 25 that would lead you to overweight Japan or overweight European equities, given what we expect of the global economy.
Given all of that, you're not that positive when it comes to the U.S. government debt market, which I find really interesting on a day like today, where you do see that haven bid into bonds. Yep. And that isn't necessarily boosting stock performance. There basically is a breakdown in some of the traditional relationship between bonds and stocks that we've seen in the past. I'm just wondering, do you not see bonds as being the sort of haven bid that they have been in the past to the same degree, even if the knee-jerk reaction is the same, that you're seeing signs that people are not necessarily going to continue to feel that way?
Lisa, I think this is like a huge question and underappreciated, because you think about building a multi-asset portfolio, you've always got to ask, what's your hedge? How do you mitigate risk? So a couple of thoughts. I mean, first of all, there are a lot of parts of the bond market we like right now. We like credit, we like securitized, we like the yield we get on those assets. We like the belly of the curve in the U.S. market. We are more cautious on the long end because of supply. But here's the thing. I do think you were exactly right in the lead up to the show. There are conditions where U.S. Treasuries still work as a hedge. They work when geopolitical risk is the catalyst for a sell-off. The problem is when you think about economic risks, for 10, 20 years, Treasuries worked so well because the economic risk was almost always concerns about a recession, concerns about slow growth. And now we've got a two-sided economy. Many of the concerns we have going into 25 are, will inflation be too sticky? Will it reaccelerate? And if that's the risk you're looking at, or that's the risk you're looking to hedge, then yes, I don't think Treasuries are the best way to mitigate risk in a portfolio. There are other strategies you can use. So when you think about, are Treasuries going to work or not, a lot of it comes down to, what are you most afraid of? I agree with you. If it's geopolitical risk, then yes, Treasuries probably do work in the short term.
Well, it is geopolitical risk today, and we're going to have a change of an administration with 2 hot wars currently taking place. So what would you advise to clients? Where should they hang out?
So I think there are a couple things. Part of it obviously is how much of a risk do you think you're going to have from Europe and the Middle East. Again, I think one of the more important things, other than a real escalation is going to be oil prices, which has so far remained contained. We do think the U.S. holds up better than Europe. We do think that you still focus on quality companies. In other words, part of hedging that portfolio is owning companies that are going to hold up better during disruptions. And then the other asset we've been looking at, which I think also works with the geopolitical sort of risk off, is gold. Gold has the benefit of scarcity. It's been an asset that's worked under geopolitical risk situations for a long, long time. And if part of also what you're concerned about is long-term U.S. debt, this is an asset that you can print more of. So that's another place that we're having, a position in the portfolio.
You've noted that it's a valuable diversifier. Is this a day like today, you look at it and you say, actually, wish I had more?
Well, whenever you have a movement, you always wish you owned a little bit more. I do think gold is, there's a certain portion you want in the portfolio. It's probably more in the low to mid single digits. But yes, I do think if part of what you're worried about is that very hard to quantify geopolitical risk, which again really hasn't disrupted markets, but it's still out there. It's still lingering, particularly with the change in administration. Then I do think gold is one of the things you own in the portfolio to help smooth the ride.
Just before we wrap it up, Russ, I want your opinion on the race to be the next Treasury Secretary. We've had a series of guests. Heard from Carl Bass yesterday saying that maybe it's already having a market impact. Evercore's Sarah Bianchi saying exactly the same thing as well. Russ, do you share that view? Is it starting to have a market impact?
I'm not sure. It's hard because there are a lot of things to disentangle. Certainly, one of the things that's disrupted the Treasury market, I think more than the race for the Treasury Secretary, are concerns about, is the Fed going to be able to cut as much as the market expects in 2025? And is inflation going to continue to grind lower? Right now, I think that's probably a bigger move of what we've been seeing in Treasury markets over the last few weeks.
Hey, Russ, appreciate the update, sir. Thank you. Russ Kostrick there of BlackRock, Evercore's Sarah Bianchi, Carl Bass, Jim Reed of Deutsche Bank this morning saying the same thing.
So there is probably some sort of read-through. It's hard to sort of draw a line specifically for a certain person or a certain news story among the multitude of news stories that have come out that could have led to a sell-off. But there's a feeling that maybe this kind of sequencing isn't going to be the same as many people thought in terms of tariffs, in terms of pro-growth. And that, I think, is getting people a little bit concerned.
It's a conversation we'll have in just a moment with an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. An update on the geopolitics. According to media reports, Ukraine is conducting its first strike using U.S. long-range weaponry within Russian territory. Moments before that, Russian President Vladimir Putin pushed ahead with a pledge to update Russia's nuclear doctrine. Putin's decree allows Russia to respond with nuclear weapons to conventional attacks. The Kremlin said it will view aggression against itself or its allies by a non-nuclear state backed by a nuclear power as a joint attack. Boeing plans to lay off more than 2,500 workers across the country. That, according to federal filings and a union official. Nearly all of the impacted workers were cut on Monday in Washington and South Carolina. Overall, the plane maker plans to cut 10% of its global workforce in the coming months. Sources tell us that President-elect Donald Trump's transition team is considering former Fed official Kevin Warsh as Treasury Secretary and hedge fund manager Scott Bessent as the director of the National Economic Council. Trump was expected to make the decision on the Treasury job last week, but infighting between Bessent and Cantor Fitzgerald CEO Howard Lutnick reportedly irritated the incoming president and delayed his decision. According to people familiar, Lutnick is no longer seen as contender for the role. That's your brief. John.
Danny, thank you. More from Danny in about 30 minutes. Up next on the program, it's Trump's test for Treasury.
Trump wants someone in there that's going to continue to move stocks higher. Yes, Trump wants someone in there to focus on the worrying trends in the bond market. Who we put in as Treasury Secretary is going to be vital to the stock markets, the bond markets, and our prosperity.
The race for Treasury Secretary continues. We'll get the view of John Lieber of Eurasia Group in just a moment. From New York City this morning, good morning.
as we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
Live from New York City this morning. Good morning. If you are just joining us, just a touch of risk aversion across the screen today. Check it out. Equities down by 1/3 of 1%. A bit in the bond market. The news out of Europe. Ukraine striking inside Russia using US weapons. The first thing that Lisa said when she came into the studio earlier on this morning, check out a move in bonds.
Well, and the reaction function, and do we learn anything from the idea that you are seeing that haven bid in the heels of some kind of geopolitical risk? I guess the counterpoint to this, if I were having an argument with myself, which I do every day, is that gold is having its best day in 3 months. Is the gold reaction outsized relative to the bond reaction as sort of its haven function? I don't know. These are the questions that I'm asking simply because have we really changed and entered some sort of new regime?
There's always a risk of overthinking it on a morning like this morning.
You don't say.
Gold is up by 0.9 of 1%. Treasury yields are down by about 5 basis points. Under surveillance this morning, Trump's test for Treasury.
Grow our economy and also to protect our economy from state actors that say have malign intentions. Yes, Trump wants someone in there that's going to continue to move stocks higher. Yes, Trump wants someone in there to focus on the worrying trends in the bond market. Who we put in as Treasury Secretary is going to be vital to the stock markets, the bond markets, and our prosperity.
So here's the latest this morning. Donald Trump's transition team nearing a decision for Treasury Secretary, reportedly leaning towards former Fed Governor Kevin Warsh. Investor Scott Besson now in talks for a separate position as the Director of the National Economic Council. John Lieber of Eurasia Group writing the infighting and the delay in announcing the pick indicates that cooler minds are not prevailing in Mar-a-Lago. Despite her appointment as Chief of Staff, Susie Wiles does not appear to be exerting an orderly influence on the operation. John joins us now for more. John, welcome to the program, sir. I just wanted you to breathe some life into that quote that we just shared with our audience. Do you think this is Susie Wiles' fault for not being able to handle the situation, or is it just Howard Lutnick, who's meant to be chairing the transition, inserting his own name into the process that has really complicated things?
Well, no, I think it's Donald Trump's decision-making style that's the challenge here. I mean, Lutnick's been an ally of Trump throughout most of the campaign here. He was the co-chair of the transition process. And in a normal world, that kind of puts you in a pole position to make, to kind of choose what job you want. And Trump, for whatever reason, or Trump's allies don't seem to like him all that much. There seems to be concern among a lot of people in the Trump camp that all of the Treasury people who are being considered, who have Wall Street ties, are just not MAGA enough and don't seem to, in particular, have enough support for Trump's tariff policies, which is, of course, reasonable if your concern is overall U.S. economic growth. And that, I think, is what's delaying here. So it's hard to blame it on anybody except for Trump himself. This just seems to be how the guy makes decisions.
Right. And according to my reporting, Howard Lutnick is no longer in the running for Treasury. So they're going to have to find a home for him somewhere else. But he has been irritating a lot of people within this transition. You say some of this comes down to tariffs. Don't they need someone at Treasury who could be a regulating force to, say, Robert Lighthizer, who they're going to put somewhere, whether that's back at USTR or taking on this new role as a trade czar?
Yeah, that's certainly my perspective, and I'm sure it's the perspective of a lot of viewers watching this show, but I think that our perspectives aren't important here. It's Donald Trump's perspective that matters, and they got elected with a mandate to increase tariffs, to do more, to bring production back to the United States, even if that means raising costs for American businesses and American consumers. Lighthizer one of the few people that survived a 4-year term of the first Trump administration and remains influential in his policymaking thinking. And so I think tariffs are an incredibly important policy initiative for Trump himself and for his transition team, and they're not looking for somebody who's going to push back. They want somebody that's going to implement this agenda, and that's what the search is all about.
So if they want someone to implement that agenda, how do you see Kevin Warsh at the Treasury being the answer? Because he has been a supporter of free trade, and you can just see over the course of the last 24 hours, every op-ed this man has written that has been an individual that has been anti-protectionism.
Yeah, sorry. When I say they, I mean the Lighthizer people who I think are close to Trump and are the ones that are driving all the challenges finding a Treasury Secretary. I don't know where Warsh fits in here. I think that he had been named in the past as a potential Fed chair. His name coming out of kind of in the last minute here as a potential Treasury Secretary indicates that there are some people in Trump's orbit who are pushing a more kind of Wall Street aligned type person for this role. But I don't know, and Warsh has been doing all the right things to kind of get ingrained with Trump's family and has been doing the right things to get his name in front of Trump for a while now. I just don't know if he solves your Howard Lutnick problem.
So according to sources I know, it's Howard Lutnick is out. So now we have Scott Bessent, we have Mark Rowan of Apollo, who's set to go meet with the president this week. Kevin Warsh will be meeting with President-elect this week. And then, of course, there's this dark horse of Senator Hagerty, who the president has a very good relationship with. Out of all those people, who can both be acceptable to MAGA, but also seen as welcoming by Wall Street?
Yeah, I think one thing you got to think about here from Trump's perspective is who's kind of the central casting kind of Treasury Secretary. Warsh certainly checks that box. Hagerty does a little bit too, right? He's kind of an authoritative figure. He's got foreign policy experience. He's got a great business background. So when I heard that name, that actually helped make them a little bit more sense than some of these other names. I think he's also proven his ability to kind of navigate the Trump world, and he's done that by hiring a bunch of people who are aligned with Trump in his Senate office. And, he did serve in the first Trump administration. He was a contender for State Department. He obviously was passed over for that. So putting him at Treasury does seem to help, well, as a potential helpful compromise between the varying wings of the Trump camps that are fighting over this right now.
As we watch the chess pieces being moved on the board, there's this real question about whether the priority here for the Trump administration will be to shake things up or whether to prioritize markets, whether to prioritize a response that is positive with respect to stock markets and maybe even, to some extent, bond markets. Are we getting any signal about that, especially when Axios is reporting overnight that Matt Gaetz, who is being nominated for Attorney General and had a lot of pushback from people within the Republican camp, that Trump was personally trying to make sure that he got through?
Yeah, I mean, you look at some of these other picks, they don't look like they're being done mindfully in a way that's trying to send a signal to markets. They look like he's trolling. I mean, there's no other way to explain the Matt Gaetz pick. I think Tulsi Gabbard is for National Intelligence Office. Like, she's not somebody you'd put in charge of America's intelligence apparatus. Gaetz has been on the wrong side of law enforcement in the past, not exactly somebody you'd pick to be your top law enforcement officer. So I just don't see this as being an orderly process that is dictated by kind of policy outcomes. I see it as, Trump making up his mind at the last second and doing things that are going to be continually unpredictable. And this is just the world we have to live with for the next 4 years.
Well, John, exactly to that point, and it brings us back to the Treasury Secretary. Is that the reason why there is so much emphasis being placed on this key economic rule? That if you have whatever you want to call it, in your words, trolling of the American people, some of these other picks that are causing some dissent even within Republicans, that if you have a Treasury Secretary that is heralded by Wall Street, that can sort of abnegate some of the other signals. Is that kind of your read on the situation?
It could kind of abrogate some of those other signals, but I think the larger signals here at play are going to be what policy direction they choose. And so when the tariff announcement comes next year, which is going to happen, there will be higher tariffs on China. There will probably be higher tariffs on other countries and potentially the whole world as well. Then those are going to send a much larger signal to Wall Street about what his intentions are than who he ends up picking as Treasury Secretary. And those are the more worrisome signals that the market's going to have to think about, because that's the thing that's going to end up affecting economic growth and the cost of goods.
So, John, I totally agree with you. Can we finish there? Because I think this is so important. The primary objective of tariffs. In Trump's first term, he talked of reciprocity. In Biden's term, we talked about things like national security objectives, protecting domestic labor and industry, all of those things. It feels like this time the primary objective is just to raise revenue to offset tax cuts. How different is this approach going to be?
Well, I mean, I think you heard the president talk about this at the Economic Club. I think it was in Detroit, where he talked about, the fact that the tariffs are effective at bringing business back to the United States. And I think that's really what this is about. The revenue is kind of a secondary benefit, but they do see potential to replace some of the income tax with the revenue from the tariffs. So that's potentially an offset for extending the Trump tax cuts. That's kind of on a different channel, though. I think the tariffs have a momentum of their own. Even if they end up raising very little revenue, they'd probably do it anyway. And the goal here is to move production back to the U.S. And I think fairness is a part of that. But I also think that, they think that the U.S. is getting a raw deal. And that's been something that Trump's been very consistent about. Yep. And now I think in this administration, you're going to see less pushback against that, no matter who they install at Treasury.
He's been consistent on that matter for several decades. John, thank you, sir. John Lieber there of Eurasia Group. I think we can all make a case for Mark Rowan, for Senator Haggerty, for Scott Besson. Who am I leaving out?
Kevin Walsh.
For Kevin Walsh. I think we can make a case for all of those people. What's really interesting to me, and I think for all of us, is how the market's going to interpret that selection. You can go back over history and select certain quotes from a Kevin Walsh that say that he's for free trade and against tariffs. Neil Dutt of Renmac, who joined us later, very different take. Because he wants the job as Fed chair, I think that will make him, Kevin Walsh, more prone to reinforce Trump's worst impulses on tariffs. That's a different take from Neil.
Especially at a time where Neil is also talking about how he tended to be hawkish when he was on the Federal Reserve and more inclined to actually combat inflation by raising rates. Again, mixed messages. You raise a good question. How does the market respond?
We'll keep coming back to this story, including some exclusive reporting from Anne-Marie in just a moment. Coming up on the program, the latest from Europe as Ukraine launches its first strike in Russian territory with Western-supplied missiles. That conversation up next.
There are many global investors that aren't interested in China anymore, but there's a lot that are. And obviously the local investors have money in China and are doubling down on investing in China. Many of the Asian investors, and in fact a lot of the Middle East investors, the Americans are gone away. Therefore, there's an amazing opportunity to put capital to work and get returns which are excess what you would get in other places. Where there is lack of money, there is usually opportunity. So we continue to build out our business in China. It's just where the money's coming from is different. And so we're raising local money in China for investing and bringing those that choose to be there to invest in China. So it's just a different, where the money's coming from is just different.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
David Costin, Goldman Sachs, out with a new outlook, the art of the deal. You get it? 6,500 on the S&P 500, the year-end target for 2025, implying about double-digit upside on the S&P 500. Equities pulling back this morning by 0.5%. On the Nasdaq, we're down by 0.4. On the Russell, we're negative by 1.2. Big risk aversion coming out of Europe this morning. In the bond market, you'll see it plain and clear. The 2-year yield is down by 6 basis points. The 10-year is down by 5. The news out of Europe, ultimately the first strike we've seen inside Russian territory by Ukraine using Western missiles.
After the U.S. said that they could, and that this actually has yielded some response from Russia with them changing their nuclear doctrine to say that they would retaliate against a major conventional weapon attack on their soil by a non-nuclear state if that state was backed by a nuclear state. A question here we can get into the tit for tat. Either way, you are seeing that haven bid at a time where some people had questioned whether bonds still would respond in this kind of way.
See it in bonds, see it in commodities, gold higher, see it in foreign exchange as well. The yen, the Swissy, outperforming in G10 against the stronger dollar. The euro a touch weaker. Euro dollar right now 105.50. We're negative by 0.4%. Under surveillance this morning, sources telling Bloomberg that President-elect Donald Trump is leaning towards former Fed Governor Kevin Walsh as Treasury Secretary. Hedge fund manager Scott Bessent now in talks for a separate position as the director of the White House National Economic Council. Anne-Marie, based on your reporting, what have you learned in the last 24 hours?
So potentially this could be a pairing they're looking at. Of course, we still need to see how Kevin Walsh does when he goes down to Mar-a-Lago and has an interview with President-elect Trump. Of course, they know each other, but this is for a different job. Scott Bessent is also still seen as a candidate for Treasury. So when you look at Treasury, there's still 4 candidates in the race. Scott Bessent, Mark Rowan, Kevin Walsh, and of course, dark horse Senator Hagerty. And what's interesting here is that Howard Lutnick is now out of the race completely. So he caused a lot of tension because he's the co-chair of the transition, but now he's out of the race. People who are still on Team Bessent, I have to say, Neil Dudd, you guys were talking about him. He said this to me yesterday. He quipped to me, we had a quick chat. He said, honestly, it takes a special person to be able to navigate the personalities of Donald Trump and George Soros.
So Bachelor Take 5, right? This is basically where we're at. There's a larger question, and John, I think that you crystallized it beautifully when you were saying the purpose of tariffs this time around. Is it going to be a negotiating tactic? Is it going to be to try to retaliate or make sure that there isn't necessarily the same kind of unfair playing ground? Or is it different? Is it about raising revenue? Is it about potentially bringing business home? And ultimately, the person who he chooses among this panoply of options will underscore that. And to me, I think that is going to be the market implication at a time where a lot of people think this is just going to be a tit-for-tat negotiation. And frankly, a lot of businesses are paralyzed right now, waiting to understand exactly what kind of regime they're going to be walking into.
Are they handing out roses in Mar-a-Lago? That's all I want to know. Is that how they select people?
Well, I mean, they haven't yet. They're being brought back, and there's
What's his name? Jesse comes out and says this is the final rose. Is that how this works?
I think so.
If you don't watch, don't worry. We'll move on very quickly. Let's talk about how this might be received. And let's take a big step back at the same time as well. It is November 19th. The election was 2 weeks ago. This has moved very quickly. It's quite breathless, and I understand a lot of people are taking a step back themselves and saying, what's the rush? We've got some time to appoint the right person. What is the rush? This became slightly messy. And I want to be precise when I use the word messy and what I'm talking about here. It's unusual to see someone like an Elon Musk, who's been very close to Donald Trump over the last few weeks, the last several months, go out on Twitter, on X, over the weekend and be quite forceful about who he would like to see as the Treasury Secretary. It's the way this sort of played out publicly, I would say, that's got a little bit messy over the past few days.
And also, why did Elon Musk go out and do that? Was he pressured by someone else? Because it doesn't seem to me in my reporting that this was a directive from President-elect Donald Trump, which is why it feels like it has gotten messy, because you have the co-head of the transition that should be vetting everyone, trying to also vie for the job, a very competitive job. You know, this is one of the highest positions you can have in U.S. government.
And these are high-caliber candidates. Senator Haggerty, Mark Rowan, Kevin Warr, Scott Bessent. These are like tip-top, high-caliber candidates.
Yeah, you raise a good question, though, in terms of why has it gotten so messy, at least in public perception and public kind of dissent. And to me, that actually raises a bigger question, which is where is the central force in the White House to make a decision? These are all qualified candidates, but there are nuances that have a pretty big policy implication around the edges in terms of how tariffs are going to be used and how they view growth versus inflation.
There's a short, very simple answer to that. It's the Oval Office. And I think it's going to be pretty clear for us all to see over the next 4 years. Let's turn to this story. The DOJ is seeking to force a sale of Google's Chrome browser. Sources telling Bloomberg the department is asking a judge to impose AI and data licensing requirements on the company. Google's saying the proposals would harm consumers and developers. Anne-Marie, their stock is down 0.6%.
So what's interesting about this case, it was filed first under the Trump administration. Then the Biden administration took it over. And now this is one of the most aggressive remedies we could see since 2 decades ago when it came to Microsoft. So potentially, if they're able to do this, this would be really a warning shot across the tech space.
How consistent do you think this is going to be across administrations when we get a change at the top of a certain group overseeing all this stuff?
FTC, DOJ, who is going to be overseeing this? This is a huge question mark, which once we get the Treasury pick, we can actually see some of these other jobs filter out, SEC as well. I think you have to remember, Trump wants deregulation, but at the same time, he certainly wants competition in big tech. He made that very clear to our colleagues over the summer when he flip-flopped on his stance on TikTok. He doesn't seem to like TikTok for national security reasons, but he understands the point of it because he said, well, if you don't have TikTok, then what? It's all Mark Zuckerberg. And you have to remember those comments from J.D. Vance, Senator Vance, who's going to be VP Vance. He says that Lena Khan is one of these few individuals that is doing good work and had to do her work with big tech.
It's only been 2 weeks. You talked about that. But there is this question, the longer this goes on.
It feels a lot longer than 2 weeks.
It feels a lot longer than 2 weeks.
Trump news cycle.
There's been a lot going on. But if you're a CEO or a CFO of a big tech company, or something that depends on big tech companies, how do you make longer-term decisions with the specter of some of this regulatory overhang and potential antitrust activity?
Before the election, any moment you see that might be viable for your company to have a conversation with President-elect, when was then a candidate, you make that call. Google CEO making that call. Hey, your McDonald's stunt was a huge hit on our Chrome website.
I think a lot of people made that call over the last few months. Alphabet in the pre-market is down 0.6%. Elsewhere, the main event in financial markets worldwide developing about 2 hours ago. Ukraine media reporting the country carried out its first long-range missile strike on a border region in Russia using Western-supplied missiles. This coming as Russian President Vladimir Putin approved an updated nuclear doctrine expanding the conditions for using atomic weapons. A real escalation in the past few hours.
This is a real escalation physically from the Ukrainian side in terms of using these missiles. The United States gave them the green light, and they did so. And then the rhetoric coming out of Moscow is also interesting. This change in how they view the use of nuclear weapons. Now, Putin said in September he was going to do that. But since we've seen this escalation potentially that they view from the West, he came out and changed this decree. In September, he said, quote, aggression against Russia by any non-nuclear state, but with the participation or support of a nuclear state, read between the lines, is proposed to be considered as a joint attack on the Russian Federation. You just see the escalation, and this comes at a time before potentially you have President-elect Donald Trump that wants to force these two sides to a negotiating table.
I think we've seen two issues around escalation over the past few months, and you've been covering this story. The reported use of North Korean military personnel in this war, an escalation. This, another one in the past few days. How do you think President Joe Biden is going to justify this at a time when the American people have voted for a leader who's basically said he wants to end this war?
Well, he dragged his feet when it came to this decision by allowing Ukraine to use these weapons. I mean, this was the top hot question we were asking him over the summer at the NATO conference. He is going to justify this by saying this is not aggression. This is Ukraine's ability to defend themselves.
Let's get to the latest over in Eastern Europe. Joining us now, I'm pleased to say, is Bloomberg's Piotr Skolomowski, joining us from Warsaw. Piotr, welcome to the program, sir. Do you see this as a new phase in this war?
It definitely is. Obviously, what we're seeing today is a follow-up to what Joe Biden did, which he gave permission to Ukraine to use those weapons, long-range ATACMS, which obviously allow Ukraine to strike targets inside Russia. The permission was limited in its scope. It was only limited to Kursk region, where Ukrainian forces have taken part of it, but in response to the fact that Russia is sending North Korean forces as well, Joe Biden allowed Ukraine to use those weapons finally. And we didn't wait very long. Overnight, apparently, according to a report in RBC Ukraine media outlet, that attack happened. We have no confirmation from Ukrainian side, although what we're hearing from Ukrainian general staff is that there was an ammunition warehouse that was hit in the city of Karachev, which is about 70 miles inside Russia, but they wouldn't say what sort of weapon were used. So there's definitely that. And yeah, it's all happening. It's also quite symbolic, because what we're seeing is that it's happening on the 10th on the 1000th day of the invasion, since the invasion started. So what we're seeing right now is the escalation on both sides. Both sides are trying to gain some kind of an upper hand before Trump comes in and his administration takes over.
Ukraine has been firing homemade drones deep into Russia for months. What makes this so different?
Obviously, I mean, it's in a way, it's something that that Ukraine has been pleading with Biden administration for months right now. It in a way is something that obviously Biden has shown as a bit of a red line, right? I mean, obviously those red lines has been moving, but in this way, I mean, if we read it in the context of the fact that this revised nuclear doctrine was just signed by Putin, it sort of pulls West deeper into this conflict. So that's why the context of signing this doctrine makes it more significant at this point.
We've seen Ukraine really beg for this ability from the West, from President Biden, this entire year. Why did Biden decide to do this now, give them the green light?
Well, it's a good question, obviously, to Joe Biden himself, but it seems like he's basically, at this point, free to do that, given that, you know, it's the new administration that will come in. But obviously, the official reason, or what we've been hearing, is that it's the involvement of North Korea that changes sort of the calculus in the situation. And even today, when President Zelensky was in European Parliament addressing European lawmakers, he said, at this point, what we're seeing is about 11,000 North Korean soldiers in Russia that ready to go into Kursk to support Russian forces, but this number can move up to 100,000 at some point. So, and Kursk is important. It's important for Russia. It's sort of a bargaining chip if at some point it comes to some kind of peace talks and negotiations. That's something that Zelensky could use when they sit to the table and start talking about a peace or a ceasefire.
So, Peter, is this the way to look at it, that essentially this is trying to grab back enough land to basically lose less when there is some sort of ceasefire, some negotiation early next year?
Indeed, yes. And obviously the fact that they have now more force to bear and to protect themselves, it gives them, it sort of secures their position slightly. Although at the same time, what we're also seeing is that, you know, on the front itself, it's Russia has been making a lot of small incremental gains across the whole front line. At the same time, it's all happening at the huge cost, human cost, apparently. Or reportedly, Russia is now losing about more than 1,000 people a day, which is just incredible number of resources are being thrown at this war. So at some point, you can imagine that, you know, we get to the point where both sides are just exhausted and they have to sit down and talk.
Shocking numbers. Piotr, thank you, sir. Piotr Skolmowski there of Bloomberg. Happy to lead some of the coverage out of the region this morning. The equity market is negative off the back of some of these headlines. We're down by 0.4%. Talked about that bid into the bond market. You see it pretty clearly. 2s out to 30s in treasuries, yield to lower across the board. With an update on stories elsewhere this morning, here's your Bloomberg brief with Danny Berger. Hey, Danny.
Hey, John. President-elect Donald Trump has chosen former Congressman Sean Duffy to lead the Department of Transportation. Duffy represented Wisconsin's 7th District in Congress for 8 years after gaining fame on the reality television show The Real World. Under Trump, the department is expected to shift its focus away from bike lanes and mass transit and towards highway widenings and building new airports. Some earnings for you this morning. Lowe's shares lower by nearly 2% pre-market. That despite a third quarter that topped estimates and a forecast bumped. However, comparable sales did fall 1.1% with softness in DIY and bigger ticket demand. That was partially offset by storm-related sales and its pro category. Home Depot also last week said that hurricanes and warm weather helped to drive demand. SpaceX is expected to launch its Starship mega rocket into space this afternoon. It follows a successful launch last month that saw the rocket's boosters caught in the air by giant metal arms. If all goes according to plan, today's launch will also demonstrate a catch landing. Starship will also perform new maneuvers during its re-entry before splashdown in the Indian Ocean. President-elect Donald Trump is expected to attend the launch in Texas. That's your brief. John.
Hey, Danny, thank you. Appreciate it. You know, when we first started covering these things, I was like, oh, I just don't get it. It's pretty cool. It's pretty cool.
I mean, it's like the ultimate baseball mitt. It's like these iron claws. It just comes down and catches the rocket. I think it's pretty awesome. I do. I actually track it all.
I'm just happy President-elect Donald Trump will be there because it means the Treasury story, I think, takes a breather. If he's out of Mar-a-Lago, he goes to Texas.
Let's they announce it there, because that would be interesting, wouldn't it? Rockets taking off. Haggerty.
Stop.
Wash.
Here's a rose.
Up next on the program, the strength of the Trump trade.
What we did need to price was a pro-growth environment where you're going to see deficit spending, deregulation, some offsets from tariffs, but how far can that really go becomes the question. When we stack it up, it looks like a pro-growth environment.
Like a really expensive gender reveal. Okay. Except for Treasury Secretary.
Okay, all right.
Too far?
So there's like a balloon?
Too far.
And it
you see, you like him now. Yes, there we go. From New York City, a beautiful morning. Good morning.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live every trading day. Balance of Power live around the world every weekday, only on Bloomberg.
Live from New York City, welcome to the program. Here's a snapshot of things right now cross-asset. At 4:20 Eastern Time, a headline crossed the Bloomberg terminal, so about 2 hours and 20 minutes ago, saying that Ukraine has made its first attack inside Russia using Western-supplied missiles. And this is the market reaction. Yields are down 5 basis points, the 10-year 437. Equities a little bit softer, we're down 0.4%. At the surveillance this morning, the strength of the Trump trade.
We're still digesting what the possibilities of outcomes could be for the Trump administration, and there are wide-ranging expectations, and so much is in the detail, so much uncertainty. I think what we did need to price was a pro-growth environment where you're going to see deficit spending, deregulation, some offsets from tariffs, but how far can that really go becomes the question. When we stack it up, it looks like a pro-growth environment.
So here's the latest this morning. Some of those Trump trades are losing steam as the post-election equity market rally stalls and the bond market sell-off stabilizes. Kit Jukes of SocGen writing, it's impossible to say that the Trump trade is now fully priced in, but we must be getting close. We still can't see much reason to take the other side of the trade before the end of the year. Kit, helpful as always. Welcome to the program, sir. Kit Jukes of SocGen. Kit, let's build on some of that. As we've looked at the FX market over the last several months, at the end of the summer, we had this big dollar long that we started to eat into. Things started to get short. And then we started to pile up this big dollar long all over again. Kit, can we just start with positioning in foreign exchange? What does it look like now?
Well, we're building up a dollar long. It's not as big as it was, although, you know, we must have built some more up since last week as well, because the market sort of kept on going. So, yeah, the market is long of dollars. People have got carry trades back on. People have got U.S. exceptionalism trades back on in a general sense. You can see it across a bunch of pairs. Although, you know, again, this morning adds a completely different sort of geopolitical dimension to it yet again. But let's go with the market isn't necessarily as long dollars as it was at its peak, but it's getting there.
You said there's not really a reason to fight it into year end, and yet you do think that people are actually underestimating the number of Fed cuts and maybe overestimating the number of ECB cuts. At what point will you get conviction to basically overweight the euro at a time where pretty much everybody has left it for dead?
I think if I imagine myself sitting on a proprietary trading desk in the days when those things existed in a big way, would I, as my bosses were trying to sort of rake together the money to pay bonuses out next year, would I be taking a big counter market bet just before Thanksgiving? I think if it went wrong, I'd be in deep trouble with everybody I knew. So, and that's my sense. Is it looks as if it's gone a bit too far, but it'll probably last. I mean, it's also worth saying, right, that the day to sell the dollar in 2016 was Christmas Day, not Thanksgiving. So it kept on going all the way to the end of the year and then unwound itself in January, February, March, with, I should add, a market that got itself excited about an ECB pivot that never happened on that occasion. But so, no, I can't see a strong enough catalyst to fight it, but you can't keep on pricing in the same thing over and over and over again. There has to be a limit somewhere.
Okay, so basically you think that there is going to be this sort of grind stronger in the dollar. Is there a threshold at which those people might say, okay, I understand, I want my bonus, this has worked, and yet I can't really stomach any longer getting long?
Look, I think the trader is probably not the person driving it, but we still see signs that the carry trade from in dollar yen, for example, has been picking up. There are still people seeking yield out there who look at the level of yields on treasuries and think, I'll have some of that. There are still people who, if you get a back off in U.S. equities, are thinking, yeah, I'll have a bit more AI exposure or a bit more U.S. equity exposure because it's outperforming. So we haven't stopped the kind of sticky long-term flows still continuing, and that may be what's grinding us higher. But I'm surely, you know, it's got to be pretty slow moving from here until the end of the year.
Kit, which currency pairs do you think best exemplify the Trump trade?
Well, I mean, so many of them, but the currencies that have been beaten up, maybe from where you're sitting, the Canadian dollar is perhaps the Trump trade exemplified because it captures exposure to the Far East. So it correlates, the Canadian dollar correlates with the Chinese yuan, which is clearly in the headlights of the Trump trade. And obviously the growth comparison between the United States and Canada is a pretty big deal as well. So maybe that one. So we're above 140 again in dollar Canada. We're up in territory. We haven't been much higher than this since, I don't know, 2001, give or take. So maybe that's the one that's the neatest way of seeing how much we've put into this.
And also the fact that USMCA has to be renegotiated potentially in 2026. Kit, when you look at potentially the Treasury options to lead the Treasury Department under President-elect Donald Trump, do any of them signify to you what the direction of travel might be for the dollar?
I mean, not necessarily. The sort of the least positive kind of person you could appoint there would be the most kind of, something. Jay Powell, he's a Republican who won't be offered that job, but someone who is an ex-Fed person or very economics person, someone who's not got an axe to grind beyond running the economy sensibly. But in the end of the day, the U.S. dollar's really done well over the last few years because the U.S. has adopted much more accommodative fiscal policy than most of the rest of the world, and on the other side of that has adopted a tighter monetary policy. I can't see a candidate for Treasury Secretary who's minded to tighten fiscal policy anywhere, so none of them's going to be negative.
Certainly didn't hear any of that on the campaign trail. Kit, thank you, sir. Kit Jukes of SocGen on the latest in foreign exchange. That dollar long, back in the summer. Do you remember that?
I do.
It all changed very quickly for about 2 months, and then we seem to be back where we were, all over again.
Because all of a sudden we're rethinking once again Fed rate cuts and how many there can be. We're rethinking America first and what that means for the dollar. And we're rethinking the strength of the U.S. economy and all that, put that together. And you get to that trader who's heading into Thanksgiving and wondering, does he really want to go against everything and say to his boss, I think now is the time to be the outlier.
Anne-Marie said this a few times. People, policy. It's really important, but I think we can all make one big assumption. There are no big deficit hawks right now about to come into power in the Treasury anytime soon.
No, and of course, you really can be, right, when you're trying to push through your principal's economic agenda. When it comes to tariffs, though, and this is an interesting point you were discussing with John Lieber, the fact of the matter is it can be a carrot and stick approach. We're going to put tariffs on you because we want to bring production back to the United States. And guess what? If you do, only then are we going to try to push those this 15% corporate tax rate, because that's the one with the asterisk, and that asterisk is made in the USA.
That conversation will continue in the next hour on Bloomberg Surveillance. Drew Pettit of Citi will be joining us around a table. We'll get the perspective of Neil Dutter of Renmac on the race to be the next Treasury Secretary. We'll catch up with Joe Feldman of Telsey Advisory Group as we wait numbers from Walmart. And we'll speak to Ed Al-Husseini of Columbia Threadneedle. Lisa said it a few times already this morning. Check out the bond market. When bad things happen, you're still buying treasuries. From New York, this is Bloomberg.